world is just burning, but we trudge on.
Nothing is burnt this week yet. It's been good. DCG and Genesis. The bombs are there, but they have not yet exploded, and I hope they don't. The FUD around Binance though is scaring the fuck out of me. I know, Alex, you're more concerned than I am, but again, when I say scaring the fuck out of me, just to be careful. Let me, Ran. I just sent you a co-host invite. Just to be careful. I don't think there's anything wrong with Binance, and that we're going to discuss that later in the show. I think they did the right thing, but just the thought of it is enough to be scared, at least for me. I'm a
Yeah, I
sensitive
mean,
man.
they're interesting, right? Because there's the solvency issue, which I don't think there's necessarily an issue there, but then there's also just the question of their concentration of power, which I think is a completely separate topic as well. But we'll definitely get to all of that soon.
Cool. The team just told me my mic is too loud, so I've moved it away. Is it better now, Alex, or is it still loud?
It's been pretty good, I think, for me the whole time.
All right, cool. If it's too loud, let me know for any other speaker. All right, guys. So today's space will be mainly focused around the whole uh, Binance, Kevin O'Leary, FTX, SBF saga, because there's a lot going on. And then next space will be, unless something happens in the next 24 to 48 hours, the next space will be over the weekend. Probably tomorrow we'll have the Twitter files drop, the Fauci files. And then we'll do the big COVID debate. We've got a lot of doctors coming. We're trying to bring Fauci himself in a few days. So we can cover that very, very sensitive topic as we wait for Twitter to release their files. So we have Simon on stage as well. Ryan, how are you, man?
I'm good, bro. How's it going?
Good, mate. Good. I'm going to finally meet you on Saturday, which
Yeah,
is
I'll
in.
be this Saturday. We're going for lunch.
Man, I have to be honest. This is the first time I cheated. I literally, your show, the one you did today, one of the best coverages of the whole Kevin and the Kevin versus Binance situation. So you kind of
Thank you, man.
inspired me to make this the highlight of
Thank you,
today's
man.
show.
I mean, it is. I guess it is the biggest news in crypto right now.
It
I
is.
think
It is.
Binance is. I think Binance is the biggest news in crypto right now, and for
Oh
for, for
yes.
all the right and all the wrong reasons. I mean, I don't know if you listened, but CZ did a spaces yesterday, and I got at the end. I was invited to speak to him and co-host with him, and I asked him a few questions, but one of the questions I asked him is like, you guys have done everything too right for too long, and it's made you too strong. And he said, and I said to him, doesn't, how do you feel about that? Because you're in a decentralized industry, but we're getting into a centralized position of power again. And he said, look, that there is no second best. He said the problem is the next exchange has less coins, less liquidity, less options, and ultimately Binance has achieved some kind of network effect, and he's 100% right. Like, unfortunately, the bigger you are in crypto, the bigger you're going to get, because you have more coins, more liquidity, more services, more customers, etc. Now that translates very well into this, what I called the bank walk. It was a bank run, but it didn't gain enough momentum, so we called it the bank walk. And the thing about the Binance bank walk is that, just in the major tokens, I think Bitcoin, ETH, USDC, BUSD, BNB, Binance have got like 61 or $60 billion. And at the peak of the bank run, I think $5 billion had been withdrawn. That's like 8%. That's not a bank run. Like, a bank run is 80% gets withdrawn. But you got to think about the momentum that you have to get for the bank run to actually happen, to the extent that it may actually hurt Binance. Because, I mean, let's just say hypothetically that something is wrong at Binance, and that there is a hole at Binance, and let's say that the hole at Binance is as big, double the size of the hole at FTX. That would mean the hole is $16 billion. Let's just, under crazy assumptions, even $20 billion. Just in the top couple of coins, Binance have got currently on the exchange $60 billion. So it's a very different story from FTX, which had less than 8 billion on the exchange. Like, you're talking about a different order of magnitude, and the momentum that would have to happen for us to find the issue in Binance, if we were to find it in the form of a bank run, it's just too big. So it's almost like they're too big to fail now.
Rand, would you say it's fair to? I pinned this tweet I did yesterday, and it got like kind of some pushback from people. But do you think it's fair for us to like use the phrase like bank run when it comes to Binance? Because
No.
banks obviously run on a fractional reserve system, and I feel like this almost. I know like David Sachs from the All In podcast had a really good point on this. He was like, it's very important like the wording we use, because it almost like lets these exchanges off the hook, because it suggests that they're allowed to run on a fractional reserve system, when in reality they should be 1-to-1, right? And if they are 1-to-1, you could run the exchange, but theoretically it shouldn't cause any solvency issues if they're actually following the terms of service.
So about 95, I mean, no, more, I think about 90, actually, let me give you the actual stat. I think it's like 99% of Binance's stuff is supposed to be backed 1-to-1. And then there is a certain amount of Bitcoin that they actually do allow, where the users actually opt in to allow their Bitcoin to be loaned out on margin. And that was the missing $250 million in the, I don't know, 60 or 70 or 80 billion or whatever the Mazars audited. So I think you're right. It's not a bank run. It's a asset test, a liquidity test, more than anything else, unless Binance is leveraged. So,
well, it is a bank run, because you're testing whether they're an illegal bank.
Yeah,
so,
I mean,
it's a test of if you're a pure custodian, then yeah, this is the test to figure out whether you are an illegal bank.
Yeah, well, as I say, Sam, I don't think it is the test, and the reason why I say I don't think it is the test is because to test FTX was easy. You just needed to draw like $4 or $5 billion to realize, or even $2 or $3 billion to realize that, hey, listen, they just didn't have any more money. They ran out of Bitcoin. We saw it on chain, right? But to test Binance, you would need to withdraw over $60 billion or over $50 billion to realize that they're not actually well capitalized.
For the audience, just to make sure the audience is in the loop, and we're going to be talking about Binance and all the FUD around them later on. And we do have, I know that Kim.com tweeted about it, Ryan, you mentioned it in your video, about insiders reaching out. So we get a lot of people reaching out. We just need to verify. So if there's anyone that works at Binance, you can reach out. We'll keep your identity private. If you want to share things with us, we don't expect much. So I'm the optimistic here, but if there's anything that we should know, anything we don't know, you're welcome to come in, and we've been pretty good at keeping identities private. So just DM me on Twitter. But for anyone that doesn't know, anyone that's not too deep into crypto, Binance is by far the biggest exchange. I saw CNBC, and we're going to talk about it later, but I'll just give you an overview. I saw CNBC talk about, or Kevin O'Leary mentioned Binance and FTX in the same sentence as the two leaders in the space. Binance was significantly bigger than FTX, about 10x the size. So I wouldn't compare them in that way, as Kevin did. And but however, they just, if anything happens to Binance, I don't know what will happen to crypto. And that's where all the FUD is coming from now. It's kind of the aftershock of what happened with FTX, and a lot of questions being asked. And then it gets very interesting, because Kevin O'Leary, who got $15 million, I don't think he got any of it back. We'll talk about it later, but he got $15 million from FTX, or Alameda, I think it's FTX, got $15 million to be their spokesperson. And after the implosion, he continues to defend them. We're trying to get him on the show. I think Ryan is trying to get him on the show as well on YouTube. He's still defending FTX. And he was at a Senate hearing yesterday, I think. Yeah, it was yesterday or 2 days ago, or today, I can't remember. And he continues to not only defend FTX to an extent, but also take jabs at Binance, trying to bring Binance down. Now, again, I don't know whether he has motives behind it, or maybe he's just being honest, and that's like what he's telling us. I just, things he believes. And it goes, it gets a bit more complex than that. So it's a bit of a battle going on between Kevin and a few others in the traditional financial world, and Binance, that we'll be exploring a bit later. But I want to kick it off. I mean, I know you want to unmute, but I want to kick it off and get Ran, Alex, and we got Wolf of Wall Street here with us as well. Scott, get your thoughts, guys, and Umbrella and Fried Chicken. Shit, we got everyone on the FOMC meeting. So maybe Alex, give us an overview on the FOMC decision yesterday, and what your thoughts are. And I would love other panelists to kind of give us give us their thoughts before we kick off the FTX and Binance discussion.
Yeah, I know, Rand, you covered this morning, so I'd love to hand it to you. But Mario, do you want me to play those clips from Jerome Powell's presser real quick, just to brief the audience?
Yeah, definitely.
Okay, cool. So we're going to play a couple clips here real quick, just to tee off the discussion, and then we're going to hand it to Rand and some others on the stage to give their thoughts. So the first clip we wanted to play from the press conference yesterday was basically, Jerome Powell started by saying that they are dead set on getting the inflation rate back to 2%. So this is how he actually opened the talk.
Good afternoon. Before I go into the details of today's meeting, I'd like to underscore for the American people that we understand the hardship that high inflation is causing, and that we are strongly committed to bringing inflation back down to our 2% goal. Over the course of the year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt.
So that was the first clip where effectively he said, they're remaining firm on the commitment. And then the second clip
I think the interesting thing is, in the last probably 10 meetings, he's done that twice, where before he talks about the meeting, he said something like, before I talk about the meeting, I want to just say the following. And I think what we're kind of seeing from him is a pattern. And the pattern is that in the more hawkish meetings, he starts off by acknowledging that inflation is the most important thing. Because he could have, like I said in my show today, he could have started off by saying something like, we understand that the increase in interest rates is starting to hurt mortgage holders and credit card holders and loan holders and stuff, and debt holders. He didn't say that. He started off the meeting by saying, he started off the meeting almost like anchoring us to say, look, whatever you're coming to listen to, what you're getting here is you're getting inflation. We're serious about inflation. We care about nothing else. It's like it's almost like a negotiation tactic where you walk in and you anchor so that the other party basically is screwed. So whatever you were hoping to hear, he started off by setting the stage by saying, listen, tonight is about making sure that the American people don't suffer anymore because of inflation.
It's also the dichotomy of the debt-based monetary system where you either have inflation or recession. Deflation, recession, inflation, higher prices. So if you start with, we're committed to controlling inflation, you're saying get ready for the recession.
Yeah, I think those are really good points in terms of just how everything was briefed. And then he makes the second statement here that I'd love to get your guys' take on, where he basically said that, while directionally things are looking good after the last CPI print, more or less they need more evidence to confirm inflation will correct.
In November, the 12-month change in the CPI was 7.1%, and the change in the core CPI was 6%. The inflation data received so far for October and November show a welcome reduction in the monthly pace of price increases. But it will take substantially more evidence to give confidence that inflation is on a sustained downward path.
Any thoughts on that?
Yeah, they're going to hold interest rates higher for longer. I think they're telling us that. And that is I don't know why anybody would think they're not going to do that. I'm sure, do government officials lie and be deceitful? But I think higher for longer seems to be the play. I think also one of the biggest things I took away from the meeting was one of the dot plots that showed they wanted to raise the terminal rate, where the terminal rate going into this meeting was set at 4.6%. And now at the end of this meeting, we're going to be sitting at 5.1. So they want to raise interest rates higher. They want more pain. He still thinks the job market is way too strong in America. He wants unemployment higher. And I think they're going to continue raising interest rates higher and longer and holding at some point.
Yeah, I think a few things that we have to put into perspective here, which I think let's break the Fed, the FOMC meeting into a few parts. The first part is the reduction in inflation, and you can't deny that the reduction in inflation is now decreasing at an increasing rate. So I think the drop between the 8.1 and 7.7 was 0.4, obviously. And then we went from 7.7 to 7.15. So we dropped by 0.6 or by 0.55, which means that we're at a point now where inflation is decreasing, but at an increasing rate, which is fantastic. So that's the first thing. The second thing is we've got to acknowledge the fact that we finally got a 0.5 interest rate cut. So that's one of the things that we have to celebrate. Like, we were getting 0.75s. It was rather unprecedented. And now we're back to getting 0.5%, which is another thing to celebrate. The third thing is that if you look at the dot plot, and for those who don't know what the dot plot is, it's where all the members of the FOMC plot by using a dot where they think rates are going to be at a certain point in time. And the majority of them think that, or the average think that the rate will be around 5.15, which means that in the entire 2023 market, a year, which is from now 13 months, in the next 13 months, they expect interest rates to go up by an additional 0.75%. Now, bear in mind, we've gone up by 0.75% for the last 3 rate increases in a row, or 4. I'm not sure if it's 3 or 4. But now we're saying from now for the next 12 months, if you take the expectation, the mean expectations, we're talking about an additional 0.75. So how I read that, and I'm not sure why the market didn't see what I saw there, is like, all right, well, great. We're now inflation is being reduced at an increasing rate, and the rate hikes are going to be dramatically slowed by a factor of multiple X's. The rate hikes are going to be slow. Although the Fed officials did say, look, we do expect inflation to linger with us until 2025, and we expect slow growth until 2025.
So my question for you and Scott would be, what are your thoughts on the response to the markets? Because I would have expected, they bounced up and then pretty much corrected all the gains relatively quickly.
Hey guys, I can say, although I'm having kind of a bad connection here, that generally the first reaction on big news like FOMC, interest rates, etc., is wrong, and we see things go one direction very fast and then reverse in the opposite direction. That didn't necessarily happen here. To address something that Rand said, I think for sure that people to some degree understand what you're saying. It'll be a much slower cycle of rate hikes, 0.75 over the entire year. But it's important to remember that markets don't react to the actual news. What markets react to is what happens versus the expectation of what the news will be. So the fact that it got 0.5, which is what was priced in and what everybody expected, that was great. So you would have expected the markets to rise based on that news, but that's not what happened because the market was also pricing in, things topping out at 5, or there only being 1 or 2 more rate hikes total. Because remember, people were thinking we'd get those 0.75, about 4 in a row, which we did, then 0.5 in December, that was expected, 0.25 in January and February, and that would be it, basically. So not necessarily would we see a pivot, but the tightening cycle would basically end, as with the hawkish tone. So even the slightest bit of information that made it seem more hawkish, that this could go on for longer and could go slightly higher, was viewed as negative news versus the expectation. So whether it's good news or bad news actually is irrelevant. It's whether it's better or worse than what the market is expecting at that exact moment. It's nonsense. It makes absolutely no sense. That's why it's very hard to find any signal in the noise around these meetings, because you see that the market irrationally reacts and goes crazy, and then generally a couple days later, maybe it returns to the same place. It's kind of the reason it's so important to zoom out and look at the bigger picture and not attempt to trade or invest around these immediate meetings. But just because the expectation was slightly worse than exactly what happened, or what actually happened was slightly worse than the expectation, that's why we saw markets drop.
I think the one thing we have to be very cognizant of, and by the way, how's it, Scott? Haven't spoken to you in a while. One of my favorite people in the space, personally and professionally in the space. So I think the one thing we have to pay attention to is, why is inflation coming down? So all the components of inflation are coming down, except the one that went up is goods. So it's the services, which went up, which means that wages in the US are still on the up, because services are provided by people who earn wages and salaries. And the second one that went down quite a bit was energy, and specifically referring to energy at the pumps, gasoline at the pumps. Now, the reason why the price of gasoline is coming down at the pumps is because Joe Biden has made a decision to deplete the U.S. strategic oil reserves, and the U.S. strategic oil reserves are now the lowest levels they've been in, I think it's about 40 years. So he's depleting, he's putting more fuel out of the market from the strategic reserves, which is bringing down inflation. But the truth is, at some point, they're going to have to stop. So either the war in Russia and Ukraine ends and petrol prices and oil prices start to normalize, or the US runs out of strategic oil reserves, and or gets to a level where they cannot release any more oil reserves, and then we get another little bump up in inflation. That's another thing that everybody's worried about. That's why everyone's talking about this double dip inflation cycle.
I think what you're saying is gonna happen. I really do. If we look back to the 70s, there were ebbs and flows, peaks and valleys in inflation.
Your mic, fried chicken, just your mic, if you can get it a bit closer, bro.
Yeah, my bad. There were ebbs and flows in inflation that we saw, where there were peaks and valleys. And I do firmly see that happening again, where we can drop in inflation, sure. And I think, if we look at what the Federal Reserve was saying a year ago, right now they figured the Fed fund rate would be at 1%. I mean, we're 4 times higher. So to me, if they're saying we're gonna raise, that they only have 2 more 25 basis point hikes, I think there's gonna be more hikes. I see this being more persistent and annoying for them than most people truly believe.
I'd also like to challenge the concept of what we're celebrating and what good news is. So, rates increasing at a decreasing rate, or sorry, what did you say? Ran, what was it you said?
Rates decreasing at an increasing rate.
Okay, decreasing at an increasing rate. So, what are we actually celebrating? Are we trying to get back to bubble economics where rates are low and we artificially pump real estate markets beyond the affordability of most Americans or most people in the world? And if good news is return to that, what I would suggest that the market needs is the thing that people don't want to celebrate, which is a massive correction in real estate to affordability, and a market interest rate that actually reflects people being able to invest in these markets, and people to actually be able to use real estate for what it was originally designed for, not as a savings account, but as something to live in. And so the celebration is to try and get back to Ponzi economics. And if we're just saying, let's try and put everything back to where it was, that's unsustainable. And we need to suffer for the Ponzi economics that we put ourselves through, delaying gratification for the next generation to suffer.
What do you think that target rate is?
Very, very quickly, just to clarify, the reason that gas prices are going down is that through November to now, oil prices universally have been shedding cost. They've been dropping, and the U.S. is actually increasing stockpiles of reserves.
I mean, I saw a chart this morning, and the chart this morning showed that there were, in fact, I'll post a chart if I can find it now, and it shows that the reserves are at the lowest point that they've been in 40 years. I just want to double check that my chart.
Here, I'll tweet. I can show you, like, these are historically, this has been going on through, like, here's a Reuters article I just found not long ago, like just now to do this. Here, I'll add it to the list here. And it's another one that says, it's been the prices, crude oil prices have been dropping. And I've seen a bunch of different types of articles regarding the reason for that, part of it is that, there's still this recession fear. Demand for oil has been declining, which I think is interesting because usually that's not the case as we head into winter. So I think that that's, either, some human behavior change has occurred that we will recognize more with a little bit of distance, or something else is happening here. There's a statement that people are no longer driving their gas guzzling cars in one of the articles I read. I don't know how universally true that is. It seems to be more a situation of the U.S. We are the ones that tend to have the non-fuel efficient cars, but there are apparently some behavior changes that have happened, and I guess COVID rearing its head again is another thing that's keeping people home. So the demand has dropped some. So the price drop, I guess, like in November, by the end of November, was like almost 3%, and then it's been dropping since then. And I haven't seen a statement that says that there's any policy that says that we are using our national reserves. That would make big news here, because that's just something that is very controversial about whether or not we should use reserves, if we're allowed to increase our reserves by finding new reserves and accessing those. So it's like a huge topic, and so that would be something that might actually supplant all of the FTX, Binance, Michigas. but I haven't seen that.
Would love, Ryan, if you have the article, it'd be good to pin it above. I think you did already.
I already pinned. I mean, look, this is one chart. I've got many more. Just the problem is I need to get my laptop to search for them.
No, all good.
And actually, yeah. But I mean, this one just shows where the blue line is, where the strategic oil reserves are as of a few days ago. And I mean, you can see exactly what's happened to the oil reserves.
Yeah, I read the same thing as well, but it was a while ago that Biden enacted a policy to allow for the strategic reserves to be used, but I haven't verified it. So anyone listening, you could verify it. But without going too much off topic, I want to go to the next point before we get into the Binance discussion, Binance and FTX and Kevin O'Leary, which is the bill by Senator Warren. I think Rand, you also covered that in your show. You covered everything in your show today. That was fast. Like, from what I understood, and I think Umbrella's with us. Maybe Umbrella, can you tell us before Alex plays the clips, what is the bill that Senator Warren is trying to get through? And before you do that, before anyone gets scared, Rand did make a point that Senator Warren's success rate in getting bills through is like 0.36% or something along those lines.
One out of 329. One out of she's lobbied for 312 or 329 bills, and she has managed to get one through. So
yeah, that one's gonna hold her through, though, right? It's gonna gives her strength and courage. That it was the consumer finance one, right? That's the thing that she hangs her hat on, and is just like, I'm gonna make this work.
She's been Umbrella for, I think, 10 years or 12 years.
But is that relatively? Is it relatively common for a senator to have such a rate of success for introducing bills? Maybe that's the basic rate.
Not for
so many.
I think not for. It depends on the profile, right? So there's a lot of people in Congress, and they are not. They're not proposing. They're not part of. They're not very active, right? They're mostly people who are part of caucuses or things like that, but they're not actually promoting bills. But for somebody who's got a high profile and is known to both write and sponsor other bills, it is remarkably low. But for whatever reason, she's still incredibly popular. She keeps getting reelected. So we'll see how, what that is. But she's been moving away from both sides, really.
We'll go back. I don't want to divert too deep into that discussion about Senator Warren, but I just want to just very briefly, Umbrella, because my focus right now is the Binance situation, which I think is the most important. So within like a minute, I won't even play the clip. In about a minute or so, Umbrella, what's that bill?
Well, effectively, she wants to ban crypto without banning crypto, because a lot of what she introduces technologically, I see is practically impossible or not feasible to implement, or it's going to be so costly, it's going to put anyone that's either out of business or basically say, well, I'm not going to participate in this economy. You know, everything from, can you actually KYC custodial wallets? You know, I think it's practically impossible to KYC custodial wallets. It's like when and I compared it to Mario, when you sign up for Twitter, do you KYC? Imagine trying to KYC everyone who signed up for Twitter. You know, it's the same sort of thing.
Yeah, but Umbrella, be careful there, because the MiCA, which is the European legislation, has components of that bill. So the MiCA legislation, for whoever cares about Europe, has a component of KYCing on custodial wallets, and even applying AML to certain transactions, etc. So I'll push back on that.
There's no doubt that KYC will end up in whatever bill is passed, period.
Absolutely.
Yeah, but when you're doing it in a decentralized world, when you're effectively trying to bring KYC or AML regulations in a world where it's basically, you know, a technology, right? You're banning effectively, or you're prohibiting a technology happening. I'm not adverse to KYC AML, and I definitely think you should have it. And I think, you know, my personal opinion is, as soon as you hit fiat on or off ramps, that's when your KYC AML should happen. I think once you're already in the, you know, crypto economy, you know, if you want the technology to be as, you know, good as possible, I don't think we once we're in that, you know, you shouldn't start having KYC AML checks in that. I think from a custodial wallet perspective, I mean, it's mind-boggling that you would try implement something like that within it. And then I guess, secondly, you know, I know, Mario, don't have a huge amount of time, is to try the reporting of transactions greater than $10,000. So that effectively means anyone doing any kind of DeFi transaction greater than $10,000 would need to report that, which I think is just ridiculous.
Yeah,
also is a bit ridiculous and difficult to do.
Let me play devil's advocate here, and I think we should sober up as an industry. And I know it's an unpopular opinion, but let's take a very sober viewpoint and say crypto gives people the ability to move multiple millions and maybe even billions of dollars in a span of seconds to anyone, anywhere in the world, right? That's why we're here. Why would governments currently allow that when they don't allow it in the traditional finance system? So why would governments allow people to move billions of dollars anywhere in the world to anyone that they want, without to terrorist organizations, to drug dealers, to outside of countries with foreign exchange control, etc., without stopping that? Like,
yeah.
Look, I know we live in the crypto world where we think that it's okay to do that, but just think of the traditional finance world. If you move $600 around, the IRS want to know about it. And here we are in crypto, moving multiple millions, and even 18-year-olds and 19-year-olds and 20-year-olds are moving multiple millions and maybe even billions of dollars. And you expect government not to stop that? I mean, I think we need to wake up and just realize that it's almost inevitable.
No,
yeah, I agree, but
the
reason why
bill is actually.
Sorry, Simon. Alexander, I'll just let Simon go because he's been trying to jump in for the last 5 minutes to speak. Go ahead, Simon.
No worries. Well, the reason why firstly, we know why they would want to stop it. But the only reason they wouldn't stop it, which goes back to the original Bitcoin mission, is because it's decentralized and it's impossible to stop. Would be the only reason. If they could have shut down Bitcoin, they had their opportunity. But now they'd have to, spend an incredible amount of money to perform a 51% attack, and
they don't want to shut it down, Simon. They don't want to shut it down. They just want to know who's moving money to who and how much.
Yeah,
like the finance system.
Yeah. So the control mechanism is you've got a very interesting compromise right now. So firstly, one of the things that was covered in the Congress and Senate hearing was the risk of all the data moving. So, for example, when China did their first ban, all of the data went over to Japan, South Korea, and Singapore. And then they realized that they had to reinstate the exchanges, because if you control the on ramps and off ramps, then you get all the data, and everyone wants the data. It's a data game. Everyone wants the KYC data. Everyone wants the tax in their country. But the compromise with once you've onboarded, you've come on through KYC, and then you've taken your funds out, you then get the immutable record of your transaction. So obviously, they will and they'll do everything they can to fight the privacy coins, the mixing, the tornado caches, and any of the tools that they can that could be an aid to obfuscating from the blockchain. And the only reason why they wouldn't do it is because any attempt to control it puts you in an anti-competitive environment. And you'd need to be in a position, and the only time when the US will do it is when they actually believe that their threat to being the empire is actually a threat. At the moment, they don't believe it is a threat. They think we've got the largest capital markets, we've got the best, all of the things that Kevin O'Leary was pitching why the US should embrace the industry. And so you can try, but if you end up creating an environment that's completely anti-competitive, that takes everyone over to the other countries, and then you genuinely believe that there's a threat to your position in the future, that's when you start looking at where's the compromise. And a good compromise is an immutable record on a blockchain of people's crime, so that at whatever stage law enforcement can actually use that in their favor.
For Warren's, there's a few things here. So first is, Warren's bill is bipartisan. Why? Because it's literally what is coming from the international regulatory segment. This is something 200 countries are signatories on, including the US. And all it does is reflect the change that's coming. It is probably got more support because of FTX, but that's really all it is from what we can see just from news articles. Like, I don't have the bill.
Do you think, Alexandra, do you think it will go through?
I think it's likely, because we're mandated to bring in these rules where ordinarily they're recommendations, but we have a mandate. And I have been talking about this for like a year, that since we've had this particular mandate coming in. And that's the first thing, is the law is changing, and we can talk about how it's changing and why. And one of the reasons why, I don't know why the presidential working group isn't the one that's basically bringing all of this in and saying, here's our regulatory structure. But so now we have, finally, Congress is coming in and saying, here's our structure, and they're literally implementing the same base structure that we're going to all have to implement in the future. So I do see it probably passing, but once again, this is why the crypto community needs to have a bill draft, right, to go up against this, because some of the things that are mandated are not possible with blockchain technology. That's the second thing. People are arguing the wrong thing. What they're arguing is should I comply? Because first of all, it's a very regulated space. It's not unregulated, but the people argue, should I comply? But the question really is, if I comply, how do I do that? Because there are not actually elements in place that allow crypto companies to comply with many of these regulations. It's literally not possible. So people have been arguing the wrong things. The other thing is that New York just passed a law.
I'll go. Just because we've got a lot of speakers, and I want to move on to the Binance.
New York just passed. It's breaking news. New York just passed a law regarding banks who want to involve themselves in crypto, even if it's third party. And then there's a new
what's
thing
that law?
So
hold on. I mean, sorry. It's just too many points at the same time. So what's that law that New York just passed?
I just don't know what I'm going to talk again, so I just want to make sure that I get
all good. So what's the but so I was trying to keep that segment in 2 minutes only, so I can move on to the Binance discussion. But you did mention there's breaking news that New York just passed a law. Is it a major law? How does it impact crypto? Very briefly. Oh, you're muted, Alexander. So what's that law
Yeah.
that was? Yeah, go ahead.
So it's a law that just passed that says you have to ask for permission before you have any crypto activity at all, not specified what. You have to ask 90 days advance notice is what you have to do if you are a bank or regulated like a bank in New York. So that is actually not insignificant. That's a pretty big thing.
I appreciate you sharing it. Any other breaking news, guys, you're welcome to unmute and share them, but we do have a team that's checking the news. So if there is anything breaking as well, they will send it to me. I want to move on. I know there's a lot we could talk about. I mean, I have to move. I want to move on, please, because even Amin wants to speak and he didn't get a chance to even speak. I mean, I'm sorry, bro, but I want to really discuss the Binance. That's the main story. Like I was hoping to get to it in like 10 minutes. And it's already been like 45 minutes. Alex, you've actually, I'm going to give it to Ran, if you don't mind. Ran, you've covered the story more than anyone. Scott, I think you've covered it as well on your show. I'd love to get your thoughts, guys, and then we'll go to other panelists. I know Fidget has his hand up. And I know that Cat Skill was critical about Binance since the early days. Would love to get an overview, Ran, before Alex plays a few clips. I'll have Ran give us an overview. What's going on? Why is this major for anyone outside of crypto? Why is this major for the space? What's happening? Why is Kevin protecting FTX? What's the latest? And then Alex, I'll let you play the clips, and I'll get Wolf of Wall Street's get Scott's opinion on this as well. Go ahead, Ran.
So look, Kevin O'Leary's been a regular on my show. The first interview that he did after the FTX collapse was on my show, and on that interview, he was very, very much pro SBF, to the point where he even said, I asked him a question. I said, if SBF came back to you now after the FTX collapse, would you invest in him again? And he said, great question. I think I would invest in him again. And that was the beginning of a Kevin O'Leary narrative of support, unwavering, complete support for SBF as things were unraveling. And as things were unraveling and becoming worse and worse, Kevin O'Leary's support for Bankman-Fried grew more and more like loyal. And then it came out that actually what happened was he was paid $15 million to be an FTX spokesperson. And if you look at how he broke up the $15 million, he paid the taxes, which I think he said were $3 million. And the rest, he had FTT tokens and FTX equity. So kind of like he got $15 million, paid the tax on it, and then the balance that remained, he bought FTT and FTX. So he has a legal obligation, because that's what he signed, to be a positive spokesperson to FTX, because that's what he signed. He got paid $15 million. Now, if he breaches that, he could be on the line for $15 million. The only thing is that the $15 million that he got, he's already paid a tax, and the rest went to zero because FTT went to zero and FTX went to zero. So that is one theory as to why Kevin O'Leary is still so much pro FTX, to the point where, to be honest, I think it's become a little bit embarrassing. I think everybody in the industry is questioning how is it that Kevin O'Leary is so loyal to SBF and to FTX, even after everything that's come out.
Can't he breach the agreement, because the equity he got is worthless, almost worth, not worthless, but almost worthless. The FTT token. Oh, you said that he paid tax, and then the rest of it was an FTT tokens and equity, no?
So if I give you $15 million, and then you use the $15 million to buy my token and my equity.
He used the money to buy equity in FTX and buy the token?
Yes, and pay tax.
Holy shit.
Can I jump in on that?
Is this confirmed, or is this what he says?
He confirmed it in the hearing.
Kevin O'Leary is protecting his ass, because that is shady as shit. It was probably him that set the valuation of FTX. I would love to understand a bit more in an investigation to whether he was the first investor that set the valuation for everybody else. But SBF essentially said, you know, I'll give you the money, you reinvest it back to me.
Correct.
He's a spokesperson. He did it with the FTT tokens. He did it with equity. Kevin O'Leary is doing nothing but protecting his own ass and his own reputation. It's shameful. He should not be a part of our industry anymore. I'm not saying that there's anything criminal or anything like that. I'm not saying that he knew any of that stuff. But he certainly should not be allowed to come into our industry after calling it a scam and then getting involved in SBF because the money was worth it. And then coming along and doing a bloody Mark Capellas where he started trying to, blame the crash of the exchange on Bitcoin, but this time backing SBF to cover his own ass because he's involved in all sorts of stuff that could be really, really detrimental to him. And so instead, he's doing an SBF. He's playing the SBF playbook, which is, I thought it was all okay. I thought it was just Binance that came along and did it. It's shameful. It's embarrassing for our industry. And I don't think that, there's anything, I've got no idea. I don't think there's anything criminal there, but he certainly should not. He should be someone.
Can I actually, let me rant on that. I'm going to play the clip, by the way, just to give people the context of what he said about Binance. And then Rand, would love to hear your thoughts on what he was trying to get at here.
Why do you believe FTX failed? I have an opinion. I don't have the records. Here it is. These two behemoths that own the unregulated market together and grew these incredible businesses in terms of growth were at war with each other. And one put the other out of business intentionally. Now, maybe there's nothing wrong with that. Maybe there's nothing wrong with love and war. But Binance is a massive, unregulated global monopoly now.
Thoughts?
So that's not the
That's not the clip.
That's not the important.
Wait,
That's a clip about Binance.
I
really
what else
hate.
did he get besides 15 million? He got 50. Sorry, I think I missed how that transaction happened. He got 15 million and reinvested it, but he must have gotten something else, right? Because that doesn't seem like that's enough for him to kind of go along with this. Am I not understanding how this?
15 million is a lot of money.
It's a lot.
I don't think
but he's worth like billions. I thought.
Wait, hold on. No. First of all, he's not worth billions.
He allegedly 400 million or so.
Yeah. Second of all, just hold on a second. If I give you $15 million and I say to you, you got to be a spokesperson for my brand, and you reinvest the $15 million into my brand, but then my brand collapses and your investment goes down to zero, and you breach your contract with me, I could still hold you liable for the 15 million, even though you reinvested it. It makes no difference. You still owe me $15 million if you breach the contract. But again, this is not the important part. Okay. The important part of the discussion revolves around two things. The first thing is, he alleges that the reason why FTX began to go insolvent, or the reason why FTX began to use customer funds, was because they had to buy out Binance. Now, you'll remember that Binance was FTX's first investor. At some point, Binance wanted to exit. It was about a year and a half ago. Binance wanted to exit. They exited their stake for a sum of 2 billion or 3 billion, somewhere around there. They got a combination of cash, BNB, BUSD, and FTT tokens. Okay, so they were bought out for a combination of, again, I'm going to say it, cash, BUSD, BNB, and FTT tokens. So now the question becomes, where did Sam Bankman-Fried get 2 billion or 3 billion or whatever the number was to buy out CZ? So this is Kevin O'Leary's theory. The theory is that, let's not say theory. This is the narrative that he's trying to create. The narrative that he's trying to create is that Binance was a big shareholder in FTX. They owned 20% of FTX, and that for as long as Binance owned 20% of FTX, FTX could not get licenses because people said, look, we don't like the fact that Binance is on the cap table. And so Kevin O'Leary is trying to spin a narrative that says, if Binance is on the cap table, it's impossible to get licenses. Therefore, the only way to become a real licensed player is to get Binance off the cap table. How do you get Binance off the cap table? Well, you need $2 billion. Some of it you can pay in creating your own token called FTT. Just give Binance some FTT. But Binance is smarter than that. They don't only want FTT. They also want $1.5 or $2 billion in cash, which is a combination of BUSD, Binance, etc. And so this is where narrative that Kevin O'Leary is creating is that because Sam Bankman-Fried was forced to buy out Binance, because that's the only way that Sam Bankman-Fried could get licenses, that is the first time that he dug into customer funds. And he's saying, look, the beginning of this whole spiral was when he started to use customer funds to buy out CZ so that he could get licensed. That is the picture that he's playing. And if you listen to the end of his testimony, at the end of his testimony, he says, or at the end of the interview with CNBC, he says, I don't think that after all the testimony that everybody's heard here, that Binance is going to get any further licenses. So you can see he's almost trying to, again, even at this point in the game, take a stab against Binance.
But
So
how do you
I
go
have
a layer
firsthand-
deeper?
I have firsthand
Go a layer
knowledge.
deeper.
I have
The
firsthand
layer
knowledge
deeper.
of this. Hey,
I'll
Simon,
give
hang
the.
on. I have
Scott, go
firsthand
ahead.
knowledge of this that ADGM would not give anybody a license. ADGM, Abu Dhabi, would not give anybody a license that was associated with Binance. Kevin O'Leary, and I'm not defending him at all, but what I'm trying to tell you is what he's saying is factually correct. And I'm not defending him at all. And I actually looked into starting 2 different exchanges and met with ADGM, had these conversations with them. I also met with the party that got a license. This is one of the royal family groups that did get a license at ADGM and did partner with Binance and did not move through with it. And so all that stuff that he is saying might be specific to.
But my question is, I want to, and then I'll go to Scott afterwards. But my question is, like, what is Kevin saying that? I know he's taking too many jabs at Binance, and I know he's being less critical than others, or not even critical about FTX. But is he saying anything that's? By the way, I ran your. If you can mute, that'll be good. But is he saying anything that's factually incorrect? Maybe Scott, and then Simon, and then Fidgetal.
I doubt he's stupid enough to say anything that's factually incorrect. Also, I think I give him a lot less credit than the rest of you may be giving him for the conspiracy theories and for him having this grand plan. To be quite frank, I mean, I've spoken with Kevin quite a few times, and I've liked him, but I think that he has a huge ego. This is some form of Stockholm syndrome and cognitive dissonance, right? I think that his ego is so inextricably tied to his decision to go so big with FTX and with SBF that he's probably having trouble letting that go. I'm not a psychologist, but in my conversations with him, that seems to be more the case. But more importantly, if you listen to the Senate hearing and his comments on what happened and the fact that it was regarded to Binance, he was very, very careful to say that these were the facts based on what SBF told him and his conversations with SBF. He didn't really promote his own narrative to any degree. He continued to say, I called SBF. This is what he told me. I called him again the next day. This is what he told me. So he was very careful to say, listen, this is my understanding directly from SBF, knowing that everybody else assumes SBF is a liar, right? Nobody's buying into any of SBF's stories. And also, I mean, if you read through, obviously, the SEC allegations and the charges against SBF, we all know that FTX was funneling funds to Alameda customer funds from the very beginning, long before Binance. So it's a nonsensical narrative. It's a stupid story. And I think Kevin, frankly, is just deflecting. I'm actually surprised that he's not pleading the fifth, saying I have no knowledge of this and just stepping back out of the spotlight. The very fact that he's going and doing interviews and admitting these things and sitting in front of Senate, I think is just a testament to his massive ego.
But you don't think that it doesn't he legally have to protect? No, but then Kevin, Ryan, I want to kind of.
I don't think so. I don't know about that.
I agree with Scott. One point is that he may or may not be legally obligated to protect FTX.
Yeah. And
the other thing,
I can't speak on that, but I can't imagine that a company that's gone insolvent, he couldn't just, say nothing. I don't understand why he couldn't just say nothing.
The baseball player, I forgot his name.
Tom Brady.
he's not saying.
Yeah, I was gonna say Tom Brady, Larry David, Shaq,
Football.
Steph Curry. You don't hear any of that. You don't hear any of them testifying in front of Senate. I think Kevin O'Leary literally has such a big ego that he was like, "They're inviting me to the Senate. I'm gonna go speak."
But he can't be compelled. Isn't he a Canadian citizen?
He is.
No one is compelled.
He's not being compelled. He's doing it of his own volition because he had the opportunity to sit in front of the Senate and be on TV. That's honestly my opinion.
No, he's
you can't be compelled to defend a fraud. Like once it's a fraud,
that's correct. That's a fraud. He's not. I don't think he's at legal risk if he does not defend FTX.
Yeah, you're not going to get sued by a company in bankruptcy that's committed fraud. Ain't going to happen. So that's not something that can even possibly happen.
No.
He is doing the SBF playbook. The SBF playbook is plead ignorance. So everything that he said is true. If you don't know the ultimate beneficial owners, and if your UBO is Binance and you're trying to get a bank account and you're trying to get a license, then they're going to ask you for who is the ultimate beneficial owner of Binance, and Binance probably doesn't provide the necessary KYC for you to grow comfort on you actually knowing where this money goes to. That's probably all true. But what all he is doing the SBF playbook, which is stating on the public record that I was duped by SBF. I'm still duped by SBF. I didn't know anything that was going on. And once you've got that on the record, then whatever comes next, you can defend yourself against, and you get all the national TV, and you get to go back to business as usual. And continue to sell your services to attach your celebrity endorsement to different services and protect your reputation.
But why is he attacking Binance? And I just don't see the logic there. Like, just shut up.
He's got to take the story, right?
I think he's deflecting. Yeah, I think he's deflecting blame from himself. That's the easiest explanation.
So hold on. Just listen to this. Let me play something for you guys. 1 second. Give me 1 second.
$2 billion. Whatever Sam Bankman-Fried paid for that stake, they made that.
It was a brilliant move. But if you think after what happened today on the U.S. Senate floor, it's going to make it easy for Binance to get licensed anywhere on Earth, I don't think so.
Right.
I don't think so.
There we go. I mean, he's indirectly saying that his agenda was to make it almost impossible for Binance to get licensing anywhere on Earth.
Absolutely, Ran. To your point, man, the point that he is attacking in any one of us that seek the license before, I think, Simon, you will understand this very well, and any other person that seeks the license, he knows that in order for Binance to have received the licenses they have received so far, they must have found a way to not disclose exactly what he can prove that is the truth. And that is a very dangerous thing for Binance, because if he builds global awareness that the disclosures that were required for Binance to get the licenses they got so far were untrue or misleading, he can win this at a global scale. And that's exactly
I don't sorry. So which disclosures are you referring to? What's the concern?
The ownership structure. At a certain point after 2017, every single regulator that you applied to asked you about the ICO, asked you who owns the business, asked you about a bunch of other things that if you have said to any regulator around the world that, yes, I have made an ICO, and yes, these are the guys that invested, and yes, we have not done proper KYC to everyone, and yes, we had issues with the Chinese as we were kicked out of Japan. You understand what I'm saying?
So what you're saying is that Binance didn't do full disclosures when applying for the licenses.
No, I'm saying that Binance, like all other guys that did ICOs and went to seek licenses, went to advisors, and these advisors found a way in order to make sufficient disclosures that made them get the license. And what O'Leary is trying to push as a narrative is to coordinate globally, around the globe, all the regulators that actually looked at the Binance filings, and he's trying to push a narrative towards there. And that narrative is he's seeking with it to get licenses revoked for Binance. And he knows that that's—
But why? What's the point of this? Like, he just fucked up with FTX, just walk away.
I don't know what his motives are, but what I'm saying from a strategy perspective and from anyone around this table that have seeked the license before, and have been through the 2017 ICOs, etc., knows that a lot of people had issues with that. And if he's pointing out to a point saying that, look, every time SBF was trying to get a license, people took issue with Binance being in the cap table, he's basically indirectly saying globally to licensing organizations, look at the files that were submitted to you. Because did you do the proper investigations? Did you see actually the proper who owns what and how capital was formed? He's stressing on follow the money. He wants to go all the way back to the use of funds, receipts, the proceeds of the ICO. He wants to go as far as possible. I don't know what his motives are, but this is the strategy he's seeking, and it's obvious to anyone that seeks the license before.
So there's two things though on that. The first is that so new regulations are coming pretty much globally, like in all the jurisdictions that crypto primarily operates in, and they do have a second bite at the apple. So if there's some statement saying, you know, Binance is or any other exchange or whatever has improper documents, they're all going to have to register in a different manner at this point. So they're all going through the process again, and they'll have another shot. Instead of reviewing old filings, they'll have to issue new filings, and they'll be able to look back through it then. The other thing is that I pinned at the top this Decrypt article that is what happened at the time of the buyout, and this is what CZ and SBF both said about that buyout. So there was a $900 million raise by a bunch of VCs, which is a whole other discussion about how that happened. They changed the valuation in less than 12 months from 1 billion to 18 billion. That is insane, right? But that's part of what happened is there was a valuation attribution that was done primarily by these VCs, not by CZ, right? And he did say Binance at the time, the same thing Amin is saying, which is Binance is not going to get through regulators. And CZ came back and said, we're probably one of the most compliant systems out there. We're very heavy on regulators and regulation and et cetera, et cetera. But that statement has actually been brought up before.
See,
Okay,
this is you've got two options in Kevin's situation. Yeah, there's only two. You were either duped or you were involved. Being involved is not what you want. So the only option you have left is you were duped. Now, either you genuinely were duped, or you need to come across as duped. That's the question that we don't really know. But to ignore everything that's presented in front of you is either you're continuing the narrative that you're duped, and that's what I think is fairly suspicious. Now, the whole thing about what he's actually trying to do to Binance, I don't think he's trying to do anything to Binance. Remember how he talked about Celsius in his video? He was like, collateral damage, thank you very much, piss off, now we can build a better exchange or something like that. This is literally, it's just him protecting his ass, and whoever needs to be collateral damage is that he's saying, here's a reasonable story of why SBF stole client money. And it wasn't because he wanted to steal client money. And this seems like a reasonable story to me. So I'll use regulations as a reasonable story. Because if I got duped based upon really dumb information, let me try the most plausible story of why I got duped, and then that's all I need to put out there, because being duped is the better story than being involved and being complicit. And
but Simon, do you remember the story that Hussein? I'm trying to bring up. I think he fell asleep. I'm trying to bring him up about the liquidity pool being created by Kevin. FTX that was being created between Kevin's exchanges, FTX, and Justin Sun's Wobby. Doesn't that show a certain?
I don't go that far. To me,
but doesn't that show? The reason I'm bringing it up is that Hussein and everything they've shared, including the block, the money that FTX paid the block, time and time again, it's proven to be accurate, and they've given us a whole data room. So I'm gonna take it more seriously now. Doesn't that show a certain level of involvement? Not criminal involvement, but I'm saying more things behind the scenes that he was doing with Sam.
Knowledge, not involved in property, knowledge.
Yeah, so that examination will happen, but this is deflecting an examination into that onto Binance, and that's what this is just the best strategy you can come up with.
Is attack, absolutely.
It's just deflection. That's what it is. Now, the whole story of the whole you need to know your UBOs. That's always been the case. That's not new regulations. If you're registered with FinCEN or any type of regulator in the world, anti-money laundering laws has been around since 9/11 everywhere. So that's not new regulations, and if you've got that wrong, you would have had to go through a remediation. And the reality is that you need to know who your customers are, who the ultimate beneficiaries are, what are the source of funds, and what are the source of wealth for everybody. Binance isn't doing any of that. There's going to be a massive remediation. They'll do that to a certain level, but you're meant to be doing that on everyone. And then every time you see something suspicious, you're meant to file a suspicious activity report. That's the rules and regulations everywhere.
And for the audience, as you see Simon, and then I'm going to give the mic to Fidgetal right after Simon, is that the discussion is heading slowly more towards Binance, which will be Mario, the focus of this.
I'm just seeing some breaking news on crypto Twitter is banks are currently closing people's accounts that had wire transfers in from FTX. So I think people should realize if you did, you might want to take action because your bank could potentially close your account.
I want to highlight one thing.
Fidgetal, maybe that's something you can. Yeah, I was going to give you the mic to comment on this before you do, and I appreciate you sharing this, Umbrella. Umbrella, do you want to? So can you send me the source, Umbrella, if you don't mind, via WhatsApp? And Hussein will join us in a bit. He's in a conference. He's the one that could tell us more about Kevin O'Leary's involvement. So Hussein is probably the biggest whistleblower we've had in the whole FTX saga. So it'd be good to have him give us his thoughts on this. Before that, anyone that was involved that works at Binance or worked at FTX or Kevin, we know everything about Kevin, but if anyone's involved in those two exchanges, do hit us up and we can keep your identity anonymous. You can either share with us information, the team will share with me, or we can bring you up on stage using an anonymous account, as we've done multiple times. Fidgetal, would love your thoughts on what was discussed so far, including Umbrella's breaking news just now. You're muted, Fidgetal. All right, Fidgetal,
I'll jump in. I'll
please do, man.
Yeah, so a couple things. I just wanted to touch on the rates discussion. Just one quick sense on that. So, yield curve has been inverted 2 years over 10, 22 or 26, 28 times since 1900, 22 times, which is about 80%. That's led to a recession. And when the spreads reach 70 basis points, I think it's either 90% or 100% chance of recession. So, I mean, you're looking at 80 to 100% chance of a recession. So, looking into next year, I mean, I think there's more difficulty ahead. Rand talked about, some of the things slowing down. That's all true, but it hasn't hit, Main Street yet. The S&P 500 only accounts for, in the US, or public companies, 25% of the jobs. And the small businesses have been really reluctant to lay off people because the labor market's been so tight. And so they don't want to let people go. And they're talking about the unemployment rate going from, I think, 3.7 now to 4.7. And so that's going to hurt at some point. Now, I don't want to get into, how that affects crypto, but I think the stock market's going to have a tough time with that. Getting into Binance, I actually think that Binance might be the most compliant centralized exchange, but being the most rotten apple in the bunch doesn't give me much comfort. So I want to talk a little bit about this. And so I'll give CZ that, but from my perspective, being in a centralized exchange has just been a license to steal. And I think that Alameda and Sam just got super arrogant with their trading, and they got wild and didn't have risk controls. And I think the one place that CZ, to his credit, as I've said it, he's just been a better criminal than SBF, and he's done a better job of trading. And if you really understand trading and have been around financial markets, you can go back and you can look at all the, go back to, the 2017, 2018, you saw the wicks where they were hitting the order book, and you can look at all this. They're all on the Binance charts. I mean, so that you just don't have fat fingers constantly. Then you go into the bear market we had in 2018, 2019. Binance was shorting all the alts and constantly pushing them down. I ran a project there. I knew 80% of the float. So I knew where 80% of my tokens were, and I'm talking to all those holders, and we were constantly going down. There was a 45-day period. We dropped 74%, and I had all the holders screaming at me, and it's just not possible for.
Can you explain what you mean by that? So what did Binance exactly do, and where do you get that information from? Because these are pretty serious allegations, which I know you've made before.
Yeah, and honestly, I have charts, and I can show you charts, and I can show you order books. I took pictures of the order books, and I have all the stuff. We had a chat with Binance. I put them all in our Telegram chat with Binance. They deleted the messages. I got the head of trading at Binance on the phone. I screamed at him. I chewed him out. He said he'd look into it. He never came back to me. I've just traded long enough to know all this stuff. So basically, call it late 2018, early 2019, the order book just firmed up in our token. And what I mean by firmed up, we went from, say, 30, 40,000 tokens on each side per tick to like 300 to 800,000 tokens. But it was more on the offer side. So I noticed that the liquidity increased. So they did increase liquidity. And so then what I started noticing is that the alts were going down and Bitcoin started going up, and they kept pushing, the small caps down. And they were all down about the same percentage wise. And so what I could notice, and then the next thing is let's say we had a million tokens outstanding, and I knew where 800,000 of them were. I knew the wallets, I knew the people holding them. We had really strong holders. And I was talking to them on a regular basis. We weren't selling. I think I mentioned it before. We were the top performing cryptocurrency in 2018. We were up 20-some% on the year. I think 24% on the year, when the average ICO was down 90%. And then in 2019, we had a couple big announcements with public companies. We jumped about 100% when the rest of the other alts were going down, and I think we pissed off the Binance market makers. Then in turn, it took us down 74% over the next 45 days. Only one day closed above a previous day high in that period, which is almost statistically impossible. I used to run a quant fund, multi 9-digit fund, done this my whole life. I traded Enron, I traded Fannie Freddie, I traded all that stuff to zero, and they never went down like some of the stuff in crypto goes down. It's just arrogant, blatant short selling. And the thing that CZ, to his credit, does is he hedges. And so right now, and I've said it before, and I know you guys heard me say it, he's been buying, from what I can see, he's been buying Binance, and he's been shorting the alts. And so kind of where I'm going with this is, and I don't think Binance is insolvent as much as I hate CZ, and I'll say a few things. It's not good for the industry if Binance goes down. Right now, it's 80% or more of the centralized exchange space. It's horrible if they go down, but there's a ton of fraud on there, and it needs to be cleaned up, and it has to be called out. And somebody needs to bring this stuff to the light to get him to actually do the right thing. So, on that, there are several commercial conflicts of interest. He should not have traders trading against the public. They have a lot of intelligence. They for sure are running stops. They for sure are using all the stuff that's going on against the traders. And I don't know why I'm the only person saying this. And again, people are using that. There's a lot of liquidity. So yeah, it provides, some, quote unquote network effects and things like that for the industry. But overall, this guy is stealing from the customers and stealing from the community. And also it's providing systemic risk in a way where there are no checks and balances, because it's opaque and we can't see. And I don't know if you guys,
on that note too, could we just set the room in terms of the Binance sort of thing? I just wanted to make 2 points so that people understand some of the things you're talking about, because I think you're very deep in it. I think probably deeper than 99% of people listening right now. So like, there's 2 sources of FUD, and I want to kind of hear your take on these in specific.
Sure.
The first one was Reuters dropped an article earlier this week, which basically alluded to the fact that U.S. regulators are discussing possible criminal charges against Binance, specifically around unlicensed money transmission, money laundering conspiracy, and criminal sanctions violations, alleging that Binance processed over $10 billion in payments. Now, that case has been open since 2018, but Reuters dropped the article this week. So that's source of FUD 1. And then source of FUD number 2 is that they recently did a proof of reserves audit. They called it an audit, but the firm Mazars claimed it wasn't like a true audit. And basically in the aftermath of that, it almost like raised more questions where people were like, okay, you're calling this as an audit, but it's not an official audit. It raised questions about their governance and corporate structure. And just as the last point, and then I want to get your thoughts on it, Catskill, is, you know, it is important to look at hard data on this. We have seen Binance have heavy exchange outflows in the past week. They've lost 5.1 billion in the last 7 days, 8.8 billion in the last 11 days. But they still do have, according to DeFi Llama, 59.7 billion in on-chain assets. So how do you, I guess, what are your thoughts on both of those kind of sources of FUD? I think you alluded to them briefly there, but in those specific buckets, what is your take?
I mean, obviously, I think they, you know, again, talking about Umbrella mentioned it, you know, the KYC aspect, when you first opened an account at Binance, you didn't need the KYC. Then they slowly brought that on as they were forced to, and then they, you know, got rid of certain countries, you know, over time. So I'm sure that's accurate. I you know, I can't speak to, you know, what the,
but that case has been open since 2018, hasn't it, guys?
Agreed.
Yep.
Agreed.
No. So that the discussion, it was a really weird article actually. And when I tweeted it, it was strange because it was DOJ was discussing bringing additional charges. So there is an ongoing investigation. They were discussing additional charges, but they were split. That's very strange. I don't know. Are they taking a poll? That's like a very, like, what's split on what? There is no split. There's somebody in charge of a particular, you know, caseload, right? And there's someone at the top of the division that deals with that particular case that's involved in there. So there is a person who makes the decision. The split is weird. I don't really understand how that works. That was a very strange thing. So, you know, I think the other thing is CryptoQuant came out today with a statement saying that all of the on-chain assets make it look, so BNB is not FTT. So the native Binance token is not the same as FTT because it is collateralized. It's one-to-one collateralized. They just did an independent on-chain audit.
But Alex, I'd love to get your thought on this, because this is what I reached out to Mario too. This, you know, the USDC issue, you know, and Mario, I from what I said to you, it wasn't quite correct when I was sending you a message on WhatsApp. It's even worse. So when this USDC halt happened, you know, I had originally thought that they had sold more USD than existed on the exchange, but then I went on, logged into my account and took a look, and they force all USDC into BUSD now, which is, for me, is even more fraudulent. And it's the definition of it, because, you know, he's saying that's a US regulated stablecoin, and he's saying that they're in compliance. But how are they in compliance if you send USDC to Binance and they automatically convert it without sending the money or doing the bank transaction, and they start issuing BUSD that's not on chain, that doesn't exist? That is the literal definition of fraud. And that is what I talked about before, when they're creating fake synthetic tokens in the centralized portion. And if people don't understand what that means and don't have a problem with it, the Binance is definitely going to have a serious problem. And everybody should be super up in arms about the fact that you send USDC, then they convert you into something that's a digital IOU, which is exactly what FTX did. And that is a huge problem. And I can tell you something else, that the New York department that you know, regulates that, I can guarantee you that they don't understand what Binance is doing when Binance is, you know, minting those totally, you know, quote unquote off chain.
Are you talking about minting BUSD? Because BUSD is minted by Paxos.
No. So no, what happened is they
hold on. Sorry.
When you send the centralized portion, so if you send USDC to Binance, they're immediately giving you BUSD to trade in there. My issue with that is that doesn't account for BUSD on chain. That's completely on a separate centralized order book that has nothing to do with it. And if you're not coming out of the ecosystem, they're not, I can guarantee you, they're not accounting for that on chain, which is the literal definition of fraud. And they're making up something that doesn't exist.
Umbrella, you're the technical guy. And Alexander, I'll go to you.
That was actually something that I think we discussed in one of these rooms. It's a big issue. Remember, it was like a month ago where they decided they were going to get rid of all the stable coins except for BUSD. And then what they did is instead of saying, okay, we're going to just sell BUSD and everybody else without it, or with any other token, we're just not going to recognize it, put it on another exchange. What they said is, okay, all of you people that have some other stable coin on here, we're just going to exchange it for what we have. Now this is, and then they like burned those tokens. And then the thing is that when you buy a token, the way you have a reserve for these things is you put the money in. So I'm going to go to like Tron and I'm going to give them $1 and they're going to give me like TUSD or some whatever it is, the equivalent of $1. Now I put that Tron dollar onto BUSD, onto Binance. Binance can't just say, okay, here is $1 coin, $1 token for you. Get rid of your Tron thing, because my dollar is in Tron. They didn't go to Tron and say, give me the dollar that represents that underlying Tron thing. I'm going to cash it out for you. And then I'm going to reissue to someone else. There's multiple steps that have to be involved. And they didn't do that. They literally just created unbacked coins and issued them. That was actually the issue there. It was a serious issue.
Before next one, Alexander, one by one. So Umbrella, can you comment before we go to Amin? Can you comment on that technical aspect of what Catskill mentioned? And just for anyone, and just explain it again for anyone listening. I'll keep the explanation brief because I know Catskill and Alexander already explained it. Can you keep it brief on what their concern is for just the non-technical people?
Yeah, I understand the concern, but I think it's completely factually incorrect, because basically, so what happens is, right, so anyone can send any sort of stable coin to Binance. So what happens in the back end, they take those stable coins, they go to the issuer of those stable coins and say, listen, I need to redeem dollars for this. Effectively, those dollars go to Paxos. Paxos mint, so the physical dollars in the bank will go to Paxos. Paxos then mints the BUSD to them. And sends those BUSD back to Binance on Ethereum.
So what you're saying is that when someone sends USDC to Binance, that USDC goes to Paxos, that mints a BUSD backed by that USDC?
Well, the USDC will get redeemed via Circle, because you can only redeem it via Circle, right? Because Circle are the issuer of USDC, as an example. So it'll go via Circle into Paxos, and Paxos would obviously send the BUSD back to Binance. So that's
Umbrella,
how it works.
that assumes, but then where, if they do that, then they're constantly at a zero balance of every other stable token. And then when you want to go withdraw, and they're saying you can withdraw in any stable token, and then they just had the issue. My point is this. My point is basically that they're saying it's backed 1-for-1, and my point is that they're creating a ledger entry where it's not actually backed on chain when they create the ledger entry. So therefore, that's not procedurally correct. Then if that's really happening and they have the ability to do that, and this is what I've been saying the whole time, is how does anybody, and this is where I'm trying to get to, how does anybody, who's the auditor that can see their systems that we don't know, that they're just creating even more, like an infinite amount of BUSD and letting their own traders doing whatever they want? Because that's what I think they have been doing since the beginning of time. And this just allows them to do it even more. And it's totally opaque. And CZ is so full of shit when he says, on CNBC, he said, you don't have to trust, you can verify. Show me where I can verify. If that guy really wants to help this industry, open up your books, show us where your profit and loss come from so we can account for that. Show us how we can audit that so we can see it, and make trading and execution your company, and make custody and settlement another company, and then have somebody else sit on top that can see all this to match it up in real time. Because right now he has a license to steal, and I think he's just skirting the regulations in being able to cheat in all these places. And I don't know why you guys talk about Kevin O'Leary and all this bullshit. You guys are giving CZ way too much credit, and I don't know why you're drinking his Kool-Aid. He's full of shit.
Can I speak on this?
It's not one. This is the whole SBF, Alex Majinski. We're like all saying one criminal's better than the other. Like, it's not that when you say that you everyone's got the things that we're debating. It's not. It's quite important to say that when you discuss one thing, it doesn't mean that the other thing's okay.
Correct.
Yeah,
I'm just saying he's a criminal
Catskill, do
too.
you have
I'm
any
just
of
saying we shouldn't let him get away with it.
My
Do you
take
have
on
any
this.
evidence that it's not backed?
Yeah.
Catskill. I understand it's easy to say that you believe it's not
the
backed.
only reason I say that is Banks and CZ said this. If you watched his interview this morning on CNBC on Squawk Box, please, people, go get that interview on Squawk Box and watch it. He didn't answer any of the questions. He literally just wanted to talk shit about Kevin O'Leary. So here's how I know it's not backed one for one by the way that they're doing it. If you send money when that bank that holds or issues that mints those BUSD is closed, it can't issue a new one, yet he's crediting on the exchange 24/7. So that is the literal definition of impossibility. The bank can't mint those he talked about this too. Banks are only open from 8 a.m. until 5 or 6 p.m. U.S. time, because it's a New York bank. So the other 12 hours of the day or 14 hours they're not open, they can't mint those coins. So
yeah, but he could be
some special
they can be accrued.
But it doesn't matter because USDC equals.
Sorry, there's too many people speaking. I mean, I'll let you comment because I know you've been trying to jump in a few times. Do you want to comment on what Catskill mentioned?
I think that that umbrella basically is the exact mechanism how it's done. I understand Cat's concern with that. That is a problem that has been happening in centralized exchanges, especially the big
I can't hear him, just so that you guys know.
Oh, okay, I'll fix it. I'll fix it for you now, Catskill. I'll remove you and put you back up. Sorry, go ahead, Amin.
Yeah, so I think that the umbrella from a mechanism perspective is 100% correct. And I think that Catskill also has a point, because this is one of the problems of all the centralized, unregulated exchanges. When I say unregulated, that means the people that don't report the consolidation between their trades and their cash balances, etc., to the regulator on a daily basis, like any other exchange would do. So the problem here, and I think that the issue is that if you are overweight crypto, okay, what you want to do is be able to also have a large position in US dollars. And I think this BUSD play is a very smart way for Binance to basically convert other stable coins into USD on demand and effectively back its own stable coin. Now, the problem with its own stable coin is that the process, as he said, the process ideally would have been that Paxo receive the US dollar, generate the BNB, right? But it doesn't happen that way. Now we are in a process where Binance actually redeems stablecoin, or says that it redeems the stablecoin for its stable BNB dollar. So the issue here is that in the mechanics, it's once again extremely opaque. I think that Binance is able today, and I think Binance's argument in the interview saying that there are not enough qualified auditors, I push back on that really hard. Ernst & Young has one of the biggest, very expert teams when it comes to auditing blockchain projects. They're based in Tel Aviv. Their team that does this per se, and they are really good. I mean, today the big fours have developed capabilities into auditing. So Binance should definitely open their books, invite the big four, and really come to closer with this point if they want to.
Joa, you've been really skeptical. Mr. Santos, you've been really sending a lot of emojis supporting what Catskill's saying. Where's your concern coming from?
You can call me. You're making me feel old, Mario. Just call me Joa.
Joa, sorry.
Yeah. I was on your show when this first happened with Alex also, and I brought up the same thing that Kevin said. Just to jog your memory, I used to be a trader at Knight Ridder, which was the biggest trading desk in the world at the time. What Kevin's saying, it's kind of like what Simon said. Just because one's wrong doesn't mean the other one's right. He never defends Sam Bankman-Fried. He simply says that this is basically started by Binance. And this is exactly what happened on Wall Street in the 90s. And as a trader, he would do the same thing. And I think Catskill probably has the same experience When you're on a trading desk, you need to look for liquidity. You try to find weak firms, attack what they have in reserves, push them down because they can't support it, and it kills off that firm, right? That's exactly what happened with Binance. There's no reason for CZ to announce that he's going to sell. If he wanted to do good and get out of his position, he would did an OTC deal. He wouldn't be doing it in public on Twitter to push down the price. He wanted to attack FTX. Did it go bankrupt because of him? No, it went bankrupt because SBF violated his terms of service. Is he a criminal? Yes, because he violated his contract. Is he a criminal because he stole? None of us know if he stole.
Who violated his contract?
Sam Bankman-Fried, because his terms and services.
Okay, yeah.
His terms and services say he doesn't touch client funds, one which Binance does not have on the term and service, right? So if Binance wants to use your funds, it can.
Hold on, are you sure about that?
100% sure.
They can't by law. They can illegally. Just because you put it in your terms and conditions doesn't make it legal.
Right now, there is no regulation on exchanges, and they can act
not true. There are regulation on exchanges. There are.
So Simon, I want to add. I think that, and this is where I was thinking about this. This is where like Binance can get around this. If they hold everything in a cold wallet, and that those tokens don't move, but they control the centralized software, they can do whatever they want. Yet
exactly,
technically not touching customer funds. And this is the whole point I've been screaming from day one. So he could, and these are where all these technicalities come in. Where
but that's fractional reserve. You need a banking license to do that.
I know,
if you create synthetics, there are regulations. In order to do these things, you have to apply for licenses. Just because they don't apply for licenses doesn't mean the regulations doesn't exist.
Simon, BUSD from Binance is not the same thing as BUSD from Paxos. If he wants to back his BUSD position with debt to himself or debt with investments that he has, he can, and that's not public information, and he's never published it.
Yeah.
So why is Paxos BUSD different than Binance BUSD? He can totally do that.
That's not what I'm saying. What I'm saying is the regulations do exist, and if you break those regulations, then you just haven't applied for the appropriate license. You can create synthetic balances. It's called fractional reserve banking. But if you don't have a banking license, then it is illegal.
Yeah, the way you're speaking about doing it, through the vehicle that you're speaking about doing it, yes. If he is issuing BUSD, which is different than Paxos BUSD, and Paxos even has it on their website that they are not the same, right? He can back that BUSD by whatever debt he wants. He doesn't need a fractional reserve license for that.
He got asked point blank if he's ever touched or used customer funds, and he didn't answer it. He had a chance on TV to answer that question, and he chose not to. And that's a huge question that he avoided. He had to answer it.
And 100% in 2017. In 2017, 100% he was trading against customer positions.
Alexander, do you want to address that one?
Someone said that he wasn't, he didn't have it in his terms of service. I pinned the terms of service up, and you can see what his terms are. And he says that they hold them in segregated accounts. Is that true? I don't know. But again, there's 3 types of accounts that they have to account for on these exchanges. They have to account for custodial accounts, which is what those leaf nodes, that's a type of proof of reserve to make sure that those accounts are untouched. Those are like safe deposit boxes. Then there are, because Binance does this as well, there's also this tokenization. They do synthetics, not in the US, but they do synthetics. For anything that they do a synthetic where they create a coin representing some other underlying asset, there has to be a reserve with those assets. The assets don't have to be specifically assigned to a particular token, but there have to be sufficient assets for the amount of tokens offered. That is where there's a huge amount of problems in this industry. People are using using tokens to play with stocks, and that's a whole other issue. The third type of account is the margin account, and that is the account where they're allowed to trade on the like where they say, Binance, you go ahead and trade on my behalf, where they're using them as a broker, and that's where they get to use customer funds. But that because of these types of accounts that people tend to blur together because it's complicated. Most of the people on the stage are very, very involved in this area, and it's not complicated for most of the people here, but for other people understanding it, and how SBF tended to get out of questions regarding his accounts is he would lump them all together. And it's very important that these stay separate because the regulations regarding each one of them is very different. And that's why we need to have proof of liquidity, proof of reserves, and proof of code. Those three things together, not just proof of reserves. That's insufficient. We have to have all.
He did add this recently. He updated the terms of service after FTX. It was not on there before.
I want to go to I want to go to Hussein. Hussein, you've been the biggest whistleblower when it came to FTX. Have you heard the discussion so far about the concerns that Catskill and Joa had?
I have. Now, I won't comment too deep into it, but okay, whatever they did in the past, they did in the past. All right, there's no doubting that something fishy happened coming up with any exchange, not only Binance, not only FTX. And I do believe that Sam took the book from other exchanges, including Binance. Now, that's true. I personally believe it. I'm not saying that's based on evidence, but I do believe that, and the Kevin O'Leary thing's exactly the same. Kevin O'Leary figured out how, with Sam's help, figured out how they were doing it and wanted a piece of the pie. So it's just the knowledge of how to play the game.
Okay, let's go. Bro, I don't know what's happening on your mic. So whenever someone speaks at the same time as you, Hussein, there's a really strong feedback. So if you could do something to fix that, because me and you and other speakers will go back and forth a bit because you make so many points. So what was that first point you said, and then you looped in Kevin O'Leary into it? Can you say it again for the audience to understand it?
Okay, so what I said is when you guys are referring to Binance doing the same thing or FTX learning from Binance, I do believe that's actually highly possible. And I actually think that's actually what happened. So I think that this game has been played for a very long time in the crypto space. And I think that what happened, again, with Sam wasn't the first person to do it. Sam was the guy to get caught. And then when I was linking Kevin O'Leary, I think Kevin O'Leary and other players figured out the game with Sam and also wanted a piece of the pie. I think that's how it happened. I don't think it was a conspiracy prior. I think it's these guys figured out how everyone else made the money. They wanted to make the money the same way. And they just basically found the cheat. Well, when I say the cheat, the way to basically take customer funds to manipulate, and the trading thing is 100% spot on. I mean, one thing is the proof of reserves. The next thing is, whitewashing inside of the exchanges. So I do agree with what they're both saying, but I think that Binance is now too big. So when we say Binance is too big, you're talking about how much customers need to exit to even affect Binance. And I don't think we're ever going to get a situation, or not right now anyway, where there's enough people withdrawing out of Binance to actually tell if Binance is lying or not lying.
If Binance keeps funds one-to-one, why, no matter how big the bank run is, why should that be ever an issue?
No, at the moment, we're talking about past and present. So if you're asking me what happened in the past, what do I think in the past and what's happening in the present, once you're big enough, you can actually have a one-to-one reserve. And I actually do think they have a one-to-one reserve right now. So I don't have any proof. I'm just telling you from my personal opinion. I think Binance right now has realigned their books and they do have a one-to-one reserve. They have the 3 separate aggregate accounts. And I think they're playing it very smart now. And I think Binance is very safe now. But what we're talking about is past and present. So if you ask me my thoughts right now, I think Binance is very solid right now. I have no concern on Binance at all. But again, that's just my thought. That's got nothing to do with evidence or any issues that's been brought up.
And what are your thoughts on? Go ahead, Cassio.
Mario, I agree in terms of liquidity. I don't think Binance is any problem, and I honestly think that they've done a great job trading in that. You've heard me say it. They've run stat arb and they know what they're doing. I just think that they're doing a lot of it illegally, and I think they're printing money and they're using all of the edges that they have that's illegal to do, and that's what I'm calling out. So I actually think they are in strong financial standing, as much as I don't like what they're doing. So I agree with that.
Yeah, it's very normal to focus on risk as you grow. So you end up with more and more TradFi people. You end up hiring regulators within your organization, you end up going from an opportunity company to a risk management and protection company. And I think Binance is square at let's fix all the issues of the past, and let's just focus on risk. I think that's exactly what happens.
I do.
I think there's a different.
Alex, just very briefly, I'll give you the mic right after, because Ryan was saying how Kim did a tweet today about reports he's received that were concerning to him. So I pinged Kim if he can jump in. He said he's got 5 minutes. So Kim, appreciate you coming in. Would love to know more what those, what you've heard, like what you know as like, what you've been able to verify and other things that are concerning you, so we can kind of discuss them on the space, because I know you have to jump off and go to bed.
Yeah, well, I'm just here for a couple of minutes. I'm going to sleep, but yeah, I did tweet about this testimony that was given, and my opinion about it. You remember our space where we talked about CZ's involvement in the fall of FTX, and then after that, he made a space where people could ask him questions, and he kind of apologized for his role in it, and he explained why he was upset with SBF, using the media and his regulatory contacts to cause problems for Binance. So when I came out and attacked him for that, I got a lot of messages from people that were insiders in Binance, either still active, or some people that have already moved on and are not in Binance anymore. And the stories that I'm getting is that there's a lot of lawlessness, there's a lot of market manipulation, there's a lot of things happening that are, not okay. And if you combine that with the risk that Binance now has, because they've literally upset the establishment and the Democratic Party by killing their poster boy and a major donor to the Democratic Party. And ever since that happened, you can see things already building up. There was recently the story where some attorneys, U.S. attorneys, could not agree on what charges to bring and if to bring any charges at all. But it's pretty clear that they are working at the Department of Justice on a case against Binance and CZ. And from everything that I can see from my angle, my recommendation would be don't have anything on Binance until you have clarity about what's going to happen. I think the risk is real that Binance will get in trouble. And the prudent thing to do in a situation like this is just, use your hardware wallet, park your crypto in there, stop speculating for a couple of months, let this whole thing work out. There's going to be some side effects to this FTX situation. There will certainly be strict regulations coming around the corner. There might be trouble ahead for stablecoin. So, you just don't want to be in an exchange right now. That's basically all I wanted to say.
I appreciate jumping in, and we'll add that to the discussion, Kim. And Kim, while you were speaking as well, before I give the mic to Alex, Shaq has said to CNBC the following. So while Kevin is going up with the, speaking up against Binance and mainly supporting FTX, Shaq quote says, "I was just a paid spokesperson," end quote. And that's it. that's all he did. And it would be good if Kevin did the same thing. But Alex, I know you wanted to speak before Kim jumped in. I'll give you the mic. Kim, you unmuting?
Let me tell you one more thing. So Kevin is there making a statement based on what he has been told, and he believes it clearly. This same story would have been told to everyone at the Democratic Party who received donations from SBF. This same story will have been told to everyone who has been hurt by this FTX destruction. So it's not just him. You need to understand that there's quite a large group of people now that believe that if CZ didn't do what he did, maybe there would have been a chance for this whole thing to survive and they could have overcome their problems if the market turned around or whatever. So don't underestimate that. It's not just Kevin, it's a lot of people that believe the same story, and these are all powerful people in the establishment that want to get back at Binance and CZ for what he's done.
Yeah, the difference with them, though, the politicians will throw SBF under the bus. They won't defend him.
Well, I'm not so sure about this. I don't know if you read the initial indictment now. There are also donation charges in there. And what that means for the Democratic Party is that they may have to pay these donations back, just like they had to do in the Bernie Madoff case. So this now means this may cost them millions of dollars, right? So they have a grudge against whoever they think caused this problem for them. That's why I'm highly confident that Binance is going to be in big trouble. And now I'm going to sleep, everybody. You chew on that.
Thanks, Kim. Appreciate it, bro.
And I love you. Bye-bye.
Take care, bro. I love you.
To Kim's point, Mario.
Or go ahead.
I'll give you. I'll just give Alex the mic because I know he was trying to jump in earlier, and then I'll give you the mic again. Alex, I do want to just point out before Alex, you jump in, just one thing, that the donations were also to Republican politicians as well. I think it was leaning more towards Democrats. Just one thing to mention there as a caveat. But Alex, any other comments on what Kim mentioned?
Yeah, I mean, like, I agree that I think at this point, right, Binance is the key player. And I think this is my angle of concern when I have issues with Binance. It's not actually necessarily around solvency or even necessarily the way they're operating. It's the fact that we now have a massive consolidation of power in the centralized exchange space. So, before FTX went down, Binance was already doing 10x the volume of any of these other exchanges. And now, you see it on some days doing more volume than all their centralized exchanges combined. You then couple in the fact that, we just saw laid bare how FTX was manipulating the media. Well, you've got Binance, which invested $500 million into the acquisition of Twitter. They own CoinMarketCap, which is one of the largest price aggregators outside of probably CoinGecko. And by the way, they're manipulating that already. If you go to the exchange flows, they are the only exchange that is rated 9.9 out of 10. And the second highest is Coinbase at 7.9. So it's like,
where's hold on, Coinbase is at 7.9.
Yeah, and then they put themselves at 9.9. So to say that there isn't some type of manipulation happening on a platform they own, they wholly own CoinMarketCap. So you see it now on the media front. And then lastly, you've got this giant I bring it up all the time, but I feel like it's one of the most unspoken about problems in crypto. But Binance launched their own layer 1 blockchain. They forked Go ETH during DeFi summer. They brought all this TBL over because any developer that wanted to take their Ethereum app and then just reprint it on Binance could. They convinced people to engage in it because it was also an exchange token. And then they tried to rebrand the whole thing to build and build chain, as if that was going to somehow distance them from it. So that my concern with Binance isn't solved.
Exactly. I want to highlight this point. I think this is a very important point for anyone listening. I think so far, and we don't know anything for sure, but so far all speakers do agree that solvency is not a concern for Binance. It's more of a regulatory concern. Do they have too much power? Are they too big of a monopoly? And that's a discussion worth having. There's a very good discussion. I know that Catskill and Noah had concerns within Binance itself. Kim mentioned that some people were, Binance has employed hundreds of people. So having some employees that have complaints to make about the way Binance operates, I don't see that as a big red flag, and it's not even comparable to FTX. So I just kind of want to recap what's being discussed now. We're discussing important topics, important points, but the conclusion that there is, at least in our opinion, and based on the information we have, there is no reason to think Binance has any solvency issues. And I think Catskill, you mentioned during CZ's interview, he did not say that he doesn't use customer funds. But he did not explicitly answer that question, at least not in that interview. I'm not sure in other interviews. He did. Hold on. He did in our space. So in our space, on record, he did say that Binance never uses customer funds. So I just want to give him credit there. And he did also say that Binance owes nobody any money.
Mario, the question was, I think the reason he didn't answer it is the question was, did he or has he at any time?
So you were kind of criticizing his past. Yeah. So I think Binance in its early days, I think there's a lot of things we could criticize, and they might face fines. Remember that investigation we're talking about, this one of the two sources of FUD right now was initiated in 2018, not too long after their ICO. So I do want to give you credit there that if you go back to their ICO days, then yeah, we may see a few skeletons in their closet. But would you agree, like Binance, where it is today, they might get fines here or there? Again, they might get fines here or there on things they've done in the past, especially ICO days. They might face more regulatory scrutiny after FTX. We might say they played a role in FTX's collapse, but would you say, just to at least dispel that one big concern, that in your opinion, Catskill, because you've been an early critic of Binance and since we started the space back in FTX days, would you say that solvency-wise you don't have any concerns at the moment?
No issues on solvency, but what I would say is that if CZ really wants to help the industry, he should open up and show what needs to be shown in a million different ways, and that's where.
But is that done through an audit? Is that the best way to do it?
Well, just take for BUSD, for example. The easy way to solve this is there should be a regulator or somebody that can see how many BUSD are issued on his centralized exchange, and then add what he has in the wallets, and those need to be equal. So whatever he has on chain, the off chain and the centralized portion needs to match, and that also needs to match with the total supply. So these are little things that he could do that he's not.
And he needs an auditor. He needs an auditor for that one.
Correct.
You need
there's commercial conflicts of interest that he's not. He has so many commercial conflicts of interest where he's trading against his own clients and his own. This is the base, and he doesn't want to open up and show this stuff. And so I'm just bringing to light where all the issues will continue to be, and where all the places that he can, basically, pick up nickels and pennies and dimes, but he's doing it constantly. And I'm just saying, like, if he truly wants to clean up the industry, he should be volunteering. He already has a huge monopoly. He could clean up and probably put everybody else out of business if he did what I'm saying, but he's making too much money and he's too greedy is what I think.
Fidgetal?
Yeah, what I was going to say, which kind of combines the start of our conversations and this part of the conversation is, and kind of some things that Simon was saying, other people are saying is, no matter what regulation comes out, the laws, at least in the U.S. jurisdiction, already exist. Whether it's in NFTs, whether it's in crypto, that's the reason why they're not in our countries, right? And so the good thing about regulation coming is that it's going to hopefully, and if it's combined with potentially the culmination of the Binance investigations and charges, which always will be a settlement, I have this weird feeling that they're going to intersect with the two other reasons why I believe for a fact that legislation is coming and has to come, is because very quickly the Tether and Ripple cases are basically unsettleable. Tether cannot be settled. So the government doesn't want to regulate by litigation, so they'll regulate by legislation before they regulate by more spotty litigation.
Hussein, what's your thoughts on what Catskill mentioned?
Look, honestly, I actually agree with him. I almost agree with everything he's actually said. See, you've got to divide this issue into two issues, right? Let's just say one is the sovereignty of the platform, and the next is the market manipulation and the trading on the platform. See, the Merkle tree is what they're using, especially when you start talking about the leaf and the data going to leaf. That's a ploy. Look, CZ can clean up, and I'm a fan, and I think if he does, it would be fantastic. And when I say I'm a fan of cleaning up the industry, so not a fan of an individual. I really would like the industry being cleaned up. The issue is the whitewashing and the trading on these centralized exchanges, because even if you're auditing the leafs and you're auditing the data that's going in there, which is the deposits and withdrawal, you're always going to have the ability to have a one-to-one. But what will happen is if you're creating more synthetics on the centralized unit and they're sitting down in other wallets, not withdraw deposits, they could utilize those for whitewashing and manipulating trades. Now, CMC is a huge issue. I don't even want to get into that right now. But having someone that has the power to control CoinMarketCap and having him controlling everything that goes on there, and obviously lifting up, and people have to fight for positions and have to create fake volumes, and the whole process to actually get onto CMC and stay on CMC and get to the top 10 requires a lot of market manipulation, and that in its core is a huge problem. So I think if you divide the two issues, which I love what's happening on this channel, sovereignty on one side, because I really have no worries about that. What I worry about in this thing is exactly what everyone else is talking about, is they're so powerful. They have the ability to create whatever they want on the centralized unit. Even if they put an audit in place, if you're only auditing deposits and withdrawal, you're only really auditing what's coming in and out. So you even on the block and on the centralized exchange, what's in and out. What you're not auditing is the transactions occurring and how many coins or tokens or synthetics are being utilized to do those trades. So there's two separate issues here. But yeah, I mean, that's in core what you guys are discussing is pretty much spot on. I agree with everything that you guys are saying.
I want to go to Simon next. Let me mute you. And then Hussein, I want to come back to you in a bit as well to go through the whole Kevin story, because I know you've been vocal about Kevin for a pretty long time now. But before that, Simon, what's your thoughts on what's been said so far?
Yeah, just a couple of things to bring to the table. Firstly, I've said it before, I say it again, that that all the regulations already exist. It's just a lack of compliance with them. If you want to rehypothecate and create synthetic balances, then you can do that. It's called a banking license. If you want to offer people returns for locking up their crypto, then you can already do that. It's called a security, and you have to have full disclosure, and you have to tell people what you're doing with their money, and you have to make sure that they're suitable to be able to invest in such a product. If you want to store people's money, it's called custody, and there's plenty of custody structures and licenses. If you want to manage people's money, then it's called a collective investment scheme or a hedge fund. And the only reason that these companies don't want to do it is because it would ruin their onboarding, and it would limit the number of customers that they can service, and they'd have to give full disclosure. And they don't want to do that. And that's the reality.
Simon, there's one more thing I'd love to get your thought on. When I ran my hedge fund, I had to certify on a monthly basis the results that we put out, and I had to sign as the CEO of that hedge fund under penalty of perjury that those results were correct and that there was basically no criminal wrongdoing. That, I mean, CZ should be doing that, and all these centralized exchange operators should be subject to that same thing. So, that would really put them on the hook. So that's, I would love to.
I just want to do the second point. At Bank to the Future, that's what we have to do as a securities business. And most companies don't want to do that. And actually, to be fair, it's not just that, it's the customers. The customers will all go somewhere else when only if a couple of companies go into compliance. That's the patient game that we've had to play for over a decade. But the second point is, one of my big fears is a movement towards US supremacy in terms of regulations. There are brilliant regulators around the world, and there are really, really, strict regulators, and there are regulations globally. And to say that if you are not in the US, then therefore you're not compliant, this is the Kevin O'Leary narrative. And I think there's a real danger in that, because there are businesses that there's a certain type of, why you'd want to work with a regulated business in the US. And there's very valid and legitimate reasons why you wouldn't want to work with a regulated business in the US. And so if the end result of this is that we say anybody that's not in the US is a dodgy, unregulated company, that's just simply not true. And that's what Kevin O'Leary was essentially saying. There are many people that don't live in the US, don't create businesses in the US, and they decide that other jurisdictions are more suitable
are. Favor is a decentralized social platform, and we've got a big piece of them, so I think we're invested. And they're built on the Lens protocol. Highly recommend you check them out. It's like Twitter, but decentralized. You can stake coins on different posts, etc., and earn money. PHAVER app. Check them out. And then the other one is Petcoin. That's a new one. They're going to pitch later today. So Petcoin is essentially, I love animals, so I'm going to love this one. I think they're using their token as a way to adopt a pet and be able to donate as well. So that's the utility behind it. It's a pretty solid team. They're going to pitch later today. We'll see what we think of them. But you can check them out at Petcoin. Their Twitter is Pet Rescue Love. Pretty cool project. Can't wait for their pitch later on. So they're the two sponsors. Back to Hussein. Kevin O'Leary, man. You've been very vocal. You talked about, just give an overview for the last time when you did that, when you spilled all those beans about FTX, that last appearance that he did, the show we did 2 weeks ago. You did talk about the liquidity pool among Kevin's exchange, and him wanting to acquire more exchanges, Justin Sunahwabi, and FTX, which is nothing wrong with that, but just shows more involvement than what we know right now. So I want to get your thoughts on why is Kevin still vocally defending Sam and FTX? Is he just being honest and that's his genuine thoughts? Is it because he's an ambassador and he feels like he's obligated, which I don't buy that one. Just doesn't make sense. Look at the other ambassadors. Or is he covering his ass from an egoistic perspective? And lastly, is there something he's hiding?
Let's start looking at this at a different angle for a sec. His argument is that the money, and he's asked Sam, and Sam's told him that the money went to Binance. All right, let's start with the biggest lie that they're talking about, because this then will make the whole picture very clear. Now, Binance and them settled, a year ago? I think it was July last year. Now, since then, you guys can go over the expenditure. Alameda and FTX have spent between $6 and $9 billion that they've recorded, right? So first of all, that 2.1 billion is not even 25% of what they actually spent in regards. Now, there's been a lot of money after that been withdrawn, including the Celsius money. So he knows that. So for the fact that he's sitting there to start with, saying that it was Binance, the money went to Binance, well, what happened to all the money that went everywhere else after Binance? So Binance money was an early payment that was received. So let's just put that first thing aside. And he knows the timeline. I mean, Kevin's not an idiot. He already got bitten once, all right? But he's just playing the game. So when you know
what game is he playing? I don't get it.
I'll get to it. I'll get to it in a sec. Okay, let's just say what we were told is true, and they were working together. And forget about conspiracies. I'm not talking about conspiracies. We're talking about the traditional market wanting to come into the crypto market. They realize there's a lot of money to be made. They've realized there's a lot of loopholes. They've seen CZ, and they've seen, okay, this guy's made this money this way. FTX is the first trial. FTX is now Sam speaking to him. They can see Sam, had less money than them, and now they believe Sam's made all this money. So everybody wants a piece of this pie. So everyone comes in and starts befriending Sam and starts to, wanting to do the same thing. And Sam is there telling, I'm giving you a hypothetical. Let's just go with this story, right? And then Kevin has become very close friends with Sam. Kevin then decides, all right, it's time for me to get an exchange. Sam is helping him out. They then realize if they all work together, they can actually dominate the space and take over from Binance. And this is just business. Forget about conspiracies. This is just how you grow. I mean, these guys work together very well, bring all their finances together, bring all their connections together, bring the regulations, put pressure on Binance, try to push Binance, when I say out of the way, try to decrease the market share of Binance and take it over themselves. So if that was the case, that means Kevin understood what Sam was doing, which means there's been a lot of discussions between Kevin and Sam all the way through. So if Sam was to come out and say, well, Kevin already knew all this stuff, if Kevin went against him, what do you think would happen? So if you ask me what the situation is, it's that he's too deep into it. So he can't just withdraw right now. And this is my personal opinion. So my personal opinion is he got stuck. They thought they were going to outplay everybody. They thought in 6 to 12 months, FTX would be no difference to Binance right now, except on a larger scale. On a much larger scale than FTX, not Binance. So they thought they were going to get away with it. And they thought that doing it this way and having the networks they had, setting up the banks they have, setting up the networks they had, eventually they will become the dominant group. So the new CZ of crypto. Now, that fell short. They all knew exactly what was happening. They knew custody. They knew money was being used. They knew all the market manipulation. They knew the commingling. Like, to me, I think Kevin was a part of the whole thing from day one. Not from day one, from 2020. So it was in the later stages that I think the involvements came in, right? And it's not only Kevin.
Sorry, Hussein. I'll mute you just because there's a lot of feedback. So did you say that you think Kevin knew about the commingling, or did I I think I misheard you.
I personally believe that Kevin knew not the exact details of the mixing of the money, but the money coming into the exchange being utilized to actually invest in other aspects. Kevin's not an idiot. If we figured it out, imagine guys like us figured it out in the first 4 or 5 days of doing our assessment. This guy who's working with him, I just think he wanted a piece of the pie. Wanting a piece of the pie, he wanted to get involved and wanted to do his own version of it. And I think he knew about all the way through all the strategies Sam was using. So now if he goes against Sam, there's a very big prospect that Sam can come out against him. And I personally, that's just my personal opinion. I mean, no facts, no there. I'm just giving you my personal opinion of why I think he's still holding on. Because why would he still be holding on? He knows that the Binance thing is a lie. He's not an idiot, right? He can go do his own research. He can see that that deal was done in July last year or June or July, whatever it is, off the top of my head. He can see that there's been, $6 billion plus spent after Binance. He can see that the Celsius funds withdrew out of FTX. I think it was January, February, whatever, March this year, early this year. I mean, the timeline is there. It's not rocket science. And the expenditure and the money that was spent is all, post Binance payout. So
sorry,
it's not
that's an interesting theory I haven't actually heard yet. So what you're saying is there is a prisoner's dilemma where just like Caroline and SBF could rat out each other, you think that they have to side with each other.
By the way, do you know, Simon, do you know that the person that ratted out Sam apparently came out earlier today was the CEO at the time, co-CEO of, I think it was of FTX. Does anyone remember who it was? Alex is on the call.
Ryan Salami, yeah. But that's
did you know about Ryan Salami? Did you know his involvement and anything about him when you did your investigation, Hussein?
I won't comment here. We knew a lot about Ryan, but let's just leave that at there for now.
Okay, sorry, Simon, go ahead.
No, yeah. So are you saying that that Kevin and SBF are playing a game of prisoner's dilemma and doing it properly, where they're not ratting out each other?
That's my personal opinion. And the only reason why I say that is nothing else makes sense to me. Because, I mean, Kevin's not an idiot. It's like let's just say he was an idiot, and he's absolutely not. But, okay, something else may happen. But when you know all the facts, but for him to sit down and say Binance took the money, and Binance, or forget about Binance, what Binance has done. He can go do his own research. What he failed the first DD with FTX. What he's going to file the next accusation. So this time, what he didn't get up and actually go and look at the books and say Binance deal was 2021. We're now in 2022. There's been all this expenditure after. I mean, they're saying there's 6 billion or 8 billion missing. There's been over 8 billion spent after Binance. Now, so what's he specifically trying to say? That only Binance? So it just doesn't make sense. To me, if things don't make sense, then, I just don't believe it. And I don't believe he didn't know. I think it is, what you're saying, the prisoner dilemma, whatever it's called. I personally believe that's what it is.
That's a pretty serious... But that's it's a personal belief. There's nothing. You don't have enough evidence because you've got evidence from your analysis that Kevin was creating that liquidity pool. There was more behind the scenes that we're doing together, but there was nothing. You don't have anything to show that Kevin was involved in the shady things that Sam did.
My personal opinion, just based on what's happening, and I'll make it very clear. The other thing is just business. That's just a bunch of guys thought they could take over the crypto space, got together. That's, to me, I mean, I've been in the game long enough to know that when people see opportunity, they take opportunity. I don't believe in that conspiracy. What I'm saying is it's not a conspiracy. That's just they found a business opportunity and they started to work together to take over. But this thing here is just my personal opinion and solely my personal opinion.
I tell you, one way to detect how high this goes is if Kevin does get on the UCC, the Unsecured Creditor Committee. So I applied to be on the Unsecured Creditor Committee for Celsius, and I couldn't get on.
Let's tell the audience what that is. So that's the committee that will oversee the bankruptcy proceedings, correct?
So they represent creditors so if you had money on FTX or FTX owes you money, so then you're a creditor, and there's going to be a committee. Anyone can apply for it, and anyone that is owed money by FTX can apply to be on the Unsecured Creditor Committee. But typically you have to solely represent creditors. So with Celsius, I couldn't solely represent creditors because I expressed a desire to work on a reorganization plan I was a shareholder, and I was also the 21st largest creditor. So when, for example, there's representation for shareholders, they form a different group of people to creditors. So you can't really represent the two. Now he's expressed his desire to be on the unsecured creditors committee. If he gets on, it's because the U.S. trustee, which is part of the Department of Justice, has approved him to be on. So I 100% don't expect him to be on the UCC. But if you do see him on the UCC, then this goes high up.
That's one of the things we're very worried about. Sorry to cut you off. One of the things we're extremely worried about is exactly that. I mean, we also we're trying to get onto. I won't go into that, but one of the fears we have is exactly what was just said right now. Because if that happens, then just forget this. This is just not going to go anywhere. But yeah, that's one of the biggest fears we actually have.
Just a word on the unsecured creditor committee. So it was announced today that Genesis has a seat at that creditors committee. For those of you who've ever listened to me before, I talk a lot about the process of bankruptcy and the role of this committee, which is incredibly important, and the rights that people have in applying to it and trying to get on the committee. The more of you that are represented, the better. So for those of you that are involved with FTX, it's definitely something you want to take a look at. But,
sorry, did you say they're on it? Or has it been announced?
It has. It was announced today.
Oh, so the UCC is announced today. Who else is on it?
And Genesis has a seat on it, which I think is.
Do you have the list
of?
Yeah,
Do you have the list?
Wintermute were also on it.
It's Winter. That'd be interesting if Wintermute is on it, but
they are. Yeah, I saw that as well.
Yeah, if anyone could find out who the whole list is, it would be really interesting to go through that.
Yeah, I tweeted it earlier, so I'll grab it in a minute. But it's those kinds of things that I think it's really easy for people to kind of gloss over. These are incredibly important if your money is trapped on one of these systems. So Simon is, obviously very well versed in this and was able to, understand the role of the committee, etc. Most people aren't, and I think that this is the kind of forum where we can do a lot by just.
Oh, guys, I do have more sources. Just quickly, I want to say this is unconfirmed 100%. Like I'm now comfortable to at least mention it as speculation. So if anyone's seen Ellen, the show, Simon, do you remember how we used to do this to help people that were impacted by this? So there's reports that Twitch, who's the DJ, a good friend of Ellen, and the DJ and dancer who's on the show, the African American guy. Does anyone know who that is on the Ellen show?
Yeah, Twitch.
Twitch.
He won So You Think You Can Dance.
Yeah, so a couple of people have DM'd us that he's apparently committed suicide because he had millions on FTX and a lot of exposure to crypto. So there's been a few reports of him having ended his life, but I haven't mentioned it. But now they're getting more of them, including 2 publications, not ones that we trust to say this is verified, but at least worth mentioning that he ended his life. So I hope this is not true, and I really hope it's not. But it is a reminder. I think what's verified though is that he has lost millions due to his exposure. And while this may not be true, and I hope it isn't, many others are, and I can guarantee you there's many people that have ended their life because of what happened. So it's a stark reminder as to why Simon does this, and a good reason we did this marathon a few weeks ago. So I hope it's not true.
I saw also about
you dropped out, Alexander.
Oh, sorry. Can you hear me?
Alexander dropped out. I'll fix it with her. All right. So before we move on from Binance, I'm just bringing up Alexander again. Yeah, Alexander, you're back
one
with
point.
us. Yeah, please do.
Before we move on to something else, because Kim mentioned something I think is important. In the past 2 months, 3 months, we've been adding about 40 people to our team. And we've interviewed a lot of people from Binance and senior positions. And the feedback we're getting from everyone is that it's an absolute mess over there. And that's why they're looking to leave. Because we're always like, why would you?
Let's do it. Hey, man, I want to do this with you. So I'm going to send you through my direct number, and let's connect. And by the way, anyone else that can, whenever we do a space, and you guys are listening, you know, it's thousands of you every time, tens of thousands now that listens per show. So if you guys can help us out by bringing out guests, for example, we're doing a space on COVID because there's the Fauci files dropping by Twitter, and you know, people are connecting us from Dr. Fauci himself to Dr. Drew to David Sinclair, etc. So the audience is, so we're doing one on the January 6th event. I know we're getting a bit political with our shows. And then we've got people bringing us, a lot of people that were involved on the ground then, the people bringing us Mike Pence. We're in discussions with his team to come on the show as well. So the audience is, you guys are the reason we're getting all these great guests and insiders coming out. So if you can connect us to anyone that can bring clarity to anything we're discussing, do DM us. We may be slow in responding, just be persistent. We've got a team checking my DMs. And yeah, Noah, I'm gonna, so not Noah, Joa, I'm gonna send you through my number. I'm gonna ask my team to send you through my number now. And would love to connect. Maybe we do a space with people that have worked at Binance if we think there's something worth sharing. And they can do it anonymously, or they can share with us the information after we verify it, and me and you could share it to bring more clarity to it. And again, this is not a jab at Binance, and this is not unrelated to the solvency concerns people have now, but it is an issue that I'm not scared to bring attention to if it's one worth bringing attention to, and considering how big Binance is of a player in the space. But yeah, so continue. What did you want to say? I'm kind of I assumed what you want to say.
Yeah. It's just to confirm, and I have no problem doing that at all. But it's confirm what Kim said, where he was talking about the state of situation at Binance. When you look at if you look at December 2021 until now, which is a year, they've added 2,200 people to their staff. There's not many companies that have the processes in place. So when we were talking about now they're not in the opportunity business, they're in the risk management business, I don't know if they're there yet. So I don't agree. Is there a solvency issue? I don't know. He's not transparent enough to know. And to reinforce what Kim said, be safe. Like, the Twitch thing actually affected me a lot more because I was a professional dancer when I was very young. So I was actually quite shocked because he was always like a happy-go-lucky type character. And so it shocks me that it was because of FTX. And
I hope it's not. But again, I hope it's not true. So just so you know, I just sharing it because we're a lot of people. Shit, it's actually trending on Google now.
Yeah, I just checked it also.
Hold on. Sorry, guys. It's been days.
Sorry, you talking about Twitch?
Yeah. I'm just checking now. It seems to be okay. Shit, it's a lot more sources saying that.
It's on his wiki. Wikipedia.
Oh shit, he's actually dead. Yeah, so people sending a speculation, DMing me. So he's actually.
No, it's on Twitter. It's been trending on Twitter for a little.
Oh shit! So here I am announcing something that's been trending for days. Look, I'm pretty shit at this. I need to check back. But so Twitch has been dead. I'm always concerned to share something that's not true. So what the rumor is because of FTX. So he's confirmed. So I kind of confused the two. I thought that it's confirmed that it's FTX is the reason he hurt himself, or he killed himself now. FTX is the reason. I thought that was FTX is the reason he lost money on FTX. I thought that was a fact, and the rumor is that he killed himself. Turns out the fact is that he killed himself, or he's dead. Apparently, the rumor is that he killed himself, but he's definitely dead. And the rumor is that FTX is the reason. So the bad news is unfortunately true, and I'm pretty fucking annoyed about this. And it'll be even more annoying that if it is true that FTX is the reason. I'm not sure if anyone could verify whether there's other sources that link it to FTX. I'm gonna check now. But yeah, man, sorry, Joe. I don't know if you know this already, but yeah, it seems to be.
Yeah, I saw yesterday, but I didn't know it was because of FTX. But
yeah, a gunshot wound to the head. Yeah, fuck.
Until we know, be safe. You know, that's all I'm saying.
And we had and Joe, we had Kraken and Binance on the show during the implosion, and they both said, among others, hey, Kraken, Jesse said, guys, take your money off the exchange. I don't really care. It's more of a headache having to hold your money. Why take it off? It doesn't impact our business anyway. We're holding it 1-to-1. So it's not, it's just an inconvenience to us. And we've had people that were close to CZ at the time when he came on confirm the same things. Like, guys, better be safe than sorry. And we asked him, I think me or Kim asked him, he's like, hey, does that include Binance? He goes, yes, that includes Binance. Why not? Like, we're not a bank. We're an exchange, and Simon's always made this point.
But that's why his latest comment really worried me. I wasn't as worried until I saw his comment where he was talking poorly about wallets, where he said 90% of people lose all their money because they'll forget their seed phrase. Why say that unless he needs people to stay
He
on?
said
he
did come out today saying it was misquoted. Yeah.
He said before, this is an old statement of his, that it's 1%. No, that 1% of people are actually ready to hold their own money. That's just his opinion of it. He also just released a new product today. So, he, at the same time that he's lost, billions in deposits, which have all gone smoothly, with minor pauses in order to cash stuff out. But there is a point where if everybody withdraws and stops using the exchange, then that alone sinks him, because it's a not used exchange or a not used account or something. So, it's not like he's completely immune. No one is, when you have no one using your product and therefore generating revenue. But I don't know that will happen. What I think is really important is for people to remember, first, it's just money. I know that sounds really horrible, that, oh my God, it's so much money. But if this has happened to you, if something has happened to you, you can recover. But you can't if you commit suicide or hurt yourself or hurt someone that you love or anything like that. So please, 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 look at the suicide hotline near you. Talk to your friends. This is none of the people that are actors in this are worth it. They're not worth you destroying your life for it. The second thing is that transparency is completely misunderstood in this space. It's the transactions between us, the users, that are transparent, not the transactions that are in the foundation or the parent company. And that's really the problem, because it's very clear what we're doing as we're transacting business. It is just not clear at all what the parent company is doing. And that's where all the problem takes place. So someone asked, do we need an auditor? I think it was Mario. Yes, we need an auditor, but the audit is not for the blockchain. It's for all the off-chain activity. That's really the main issue, because this is essentially how they're pulling, again, this Enron thing, 2 sets of books, 1 set of blockchain and 1 set of off-chain books. I'm not particularly concerned about whether or not there's, this investigation with the poll of like, should we investigate? I don't know. I'm not particularly concerned about it, because yes, there is more money laundering that happens on Binance than any other chain, but also it is much, much larger than any other chain. The other thing is that the thing that most of the banks have been focusing on in the past 2 years in terms of money laundering is actually high value art and that trade, like the trade of luxury goods, because that does seem to be where there's more money laundering activity. And of all the chains, Ethereum actually has the most. And I haven't heard anything about a discussion of money laundering on Ethereum. So this is where the brokers, art brokers and art dealers now have to register if they're high value art dealers. So they're really cracking down in that area.
I want to go to the Amin. I've got a question for you, Amin and Simon. As for both of you, and it's a hypothetical question. Actually, I won't ask the hypothetical question because people will consider it FUD. I'll go to my second question. What would get you concerned about Binance? So we all concluded that we're not concerned. Is there any indicator that, hey, shit, now I'm concerned. Now I've got I've got a red flag on Binance, and we're talking about Binance's solvency and their one-to-one custody of client funds. So that's a question that I have, and I wanted to add something to it. So what would make you concerned? Yeah, I think that's it. So what would the second one is about the audit. So I want to end it with the following: the audit that came out, and CZ calling it an audit, the auditing firm saying it's not really a full audit. I'd love your take on it. And I mean, I think you run an exchange, so you're perfectly positioned to answer that one.
Yeah, I think first of all, I think the major concern for me is if regulators start looking at the Binance application, follow basically the lead on what O'Leary is trying to build as a story, and basically start revoking licenses for Binance. And then it falls very quickly into the misrepresentation, criminal charges, and stuff like that. Because this is a narrative that is trying, it's a very cheap narrative to build. It doesn't have to prove a lot of things. You just need to build sufficient doubt that they review the actual application, they demand the ownership structure, and there is some type of misrepresentation in the application, and they can revoke immediately. That's the first thing. Second thing, if it's that also is triggered by some type of U.S. regulators putting pressure on AML, because AML is a big deal for a lot of these countries. Once your country start becoming a gray, has a higher risk of AML risk, etc., your whole financial industry is affected by that. We know, for example, the UAE had issues with that, etc. So countries, this is for countries extremely important. So if they start getting a push from the US to look into AML and Binance position in terms of AML, and look at the application and look on what basis actually they gave Binance a license, etc. That's for me big red flag if that starts to happen. And I think that's what O'Leary is trying to build as a narrative. It's very cheap to do. You just need to engage enough doubt around the overall Binance regulatory application and what they actually declared and where is the truth, etc. So that's for me, that's the one thing. Second thing is that, look, today in our industry, there are all big four, Deloitte, Ernst & Young, all the big four auditors are able to give you proper audits. They all understand digital assets. They all have very good teams of digital assets. And this is not the situation where we were in 2011, where you still had, guys, etc. So for me, any serious exchange that really wants to run an audit, it's very easy to do. And in addition to that, I think that's not the level of transparency we need to get now. The level of transparency we need to get is actually exchanges being transparent on the account activities and on the wash trading activities inside the exchanges. Because want it or not, if you are 75% of the volume in an industry, you are making the prices. No one can arbitrage you out of it. So Binance can decide that Bitcoin can go to $3 tomorrow morning, and all other exchanges need to follow, or they can. So when you have such a big position in a market, exchanges basically you have a price. How do you call it? Price leadership, right? So so it completely kills the price discovery. And we are in an environment where we have built DeFi, we have built resilient parallel infrastructure that could take over. No one is too big to fail. And just one last word for and this is
we good to answer, and we are good to answer the question in your with this all. I mean, what would bring concern, and what would be like, hey, shit, I'm concerned now. Any indicator that would change your mind?
Revoking license. When you start to see jurisdictions that are starting to revoke.
Okay, because then they might. Would they disclose why they've revoked a license, or they'll just revoke it?
Probably they would have to disclose it in certain cases, depending. But if they revoke it on the basis of misleading declarations or etc., if the depending on the underlying cause and depending on jurisdiction, in certain jurisdictions they will just set a deal with you where they revoke you the license and you go away. For me, that's basically where you're going to see that O'Leary is trying to get traction, and I think he's positioning himself in somewhere where there is place to be positioned. I mean, there is a room to play here in coordinating regulatory action. That's something that probably he could pull some traction there. So that's my main worry. And my final thoughts for all those entrepreneurs like Simon, like me, that can kind of and other people that, well, actually my thoughts are not for me, but my thoughts of all the people that played by the rule and have want to play this regulatory game and failed, because we need to remind people that when you are in an environment, when you are compliant as an entrepreneur and some other people are not compliant, they gain market share because people don't want to do KYC. People don't want to get audited. So you need to understand that people that can't afford, well, I can afford less than Simon, but Simon can definitely afford to play the regulatory game and to stay there for a long time, because there is a belief that all this stuff is going to become regulated, and the people that build resilient enterprises that are built on compliance, on things that are structured, are going to win in the long run, because we're making the long bet on this industry.
Cool. All right, man.
So
well, I appreciate your overview. Yeah,
Mario,
Catskill, go ahead.
Yeah, so I wanted to add some color on that because I think Amin made a lot of great points. But what he was referring to, that CZ said in the interview, in the CNBC interview today, that no audit firm had the ability to audit a crypto exchange, at least no large one that knew what they were doing. And that's just like, I really encourage everyone to go watch that interview, because he really—
Yeah, is that not true? Is that not true?
No, I don't think that's true at all, because who audits Coinbase? Deloitte audits Coinbase, I think. And why if they can audit Coinbase—
Hold on, Deloitte audited Coinbase?
It's still an attestation.
It's still an attestation?
Yeah, I know. I thought it was audited too, so I had to go check. But yeah, it's still an
Is Kraken audited?
No, none of them
Kraken
are
is, yeah.
audited yet.
Oh,
They're
Kraken
all
is
still
Simon.
using—
Hold on, Kraken. Who audited Kraken, Simon?
Pass. I can find out though.
So
Be interested
Mario
to see.
too.
If you find out, hold on. Cassie, I'll give you the mic. But Simon, if you find out that a Big Four audited Kraken, that would be, for me, I'd say, okay, now we have a point to be concerned about.
Of course, Coinbase is audited. It's a requirement by the SEC to be audited.
Not the entire.
Coinbase is
the
100%
entire company
audited.
is not. No, I thought it was too, but it is not. Apparently, it is because of the way that the ATS works. It's actually a there's an attestation for most of it. Like the vast majority, like it's not even relevant with anything else is audited. And I mean, I think it's crap too. But also the other thing is there's been the rules for audit are outdated, because digital asset actually refers to a period of time before there was any virtual currency. Digital assets were like avatars or your website or things like that, and were usually counted with goodwill. And there have been several different proposals to actually account for them as assets, but they haven't actually passed yet. And this is one of the issues with respect to audits, is that they don't actually categorize them properly as things that have external value. They're really still categorized as these sort of ephemeral things. And that's actually one of the things that, for example, Tesla decided not to trade cars for Bitcoin because of the tax reasons. Whatever he says, that's not actually what happened, right? So you can actually see the decisions that some of these companies have made while taking advantage of this before it changes. It has to change, and one of these will pass, but just not yet.
I'm sorry to push back on that, but definitely the Big Fours are eligible, are able, have methodology, and have put their teams into par with the industry. And first of all, accounting for digital, we can get into the accounting treatment later on if you want to.
No, bro, no, enough. We've gone deep enough. I mean, we've gone deep enough.
But just to clear the doubt on this, Big Fours, and Mario, if you want, I can get you one of each Big Four firm responsible of the digital asset section, and they can tell you that they can audit and issue audit reports. That's for sure, 100%.
Okay, that'll be interesting to check. I'm actually gonna check that. If anyone knows the answer, anyone in the audience or anyone on the panel,
we've engaged KPMG's digital assets.
Hold on. So you got CZ saying that implying that they wouldn't because they scared from crypto, but you're saying they can. So is it more maybe they're concerned about Binance because of what happened during the ICO days because of their past? What do you think on that point? Because that to me is something worth exploring.
Mario, I still think they're trading against customers is what I think. I don't think they want an audit, and I'm going to keep screaming it because I think they're trading accounts, fractional reserve and whatever. CZ is just is really good at. They're running an ARB. I can see it. There is no way that BNB is the best performing crypto this year when everything else is going down, and it's just way too obvious. He's very shrewd at trading. He's very strong at it. I don't think they have any insolvency issues. But I really think he does not want real auditors in there looking at that stuff. And the last thing I'll say just on that interview this morning that for me is like just telltale signs of just complete bullshit is that he said that he almost forgot about his FTT holdings. You don't have this is like these things are just massive red flags. And I said it before, you know, you don't have $500 million or $1 billion in some account that you forget about. I mean, that's just bullshit.
Yeah. So the when he said it, that was I think that was a slip up. Like he almost forgot about it. Yeah, I think that was just.
Yeah.
I hope it is, but yeah.
He said in other interviews that he doesn't care about money, and like I said this too, and I'll keep screaming it. You don't get to be in his position, and you don't get to be a billionaire if you don't care about money. And SBF said the same thing. My point with the reason I'm pointing these things out is, to me, I'm just calling bullshit because I'm saying like he's a liar. And when people act like this and they make statements like that, it's just bullshit, and it makes you have to question everything else that they're doing. And that's my only point with bringing it up. It just, I don't think he's credible. And I think if you watch that interview, he didn't want to answer the questions. He also, you know, Coin Mamba, I don't know if you talked about that. You know, he kicked him off for talking about that. And we don't need to go deep into that, but the problem is, if he sees he doesn't like people, he's kicking them off his exchanges. He's extremely upset about Kevin O'Leary talking shit about him. I mean, he just, you know, it's like Trump not acting presidential. CZ is not acting like a good steward of our space with his attitude, and he's just flippant. For me, I think he's just an arrogant ass, and I don't think running the company that he's running, he shouldn't be acting like that and just not avoiding questions, no transparency. He's just not acting like the top guy in our space with the biggest, you know, company. Like, I don't think he's a good representation of crypto. And I'm going to keep calling out where I see things are totally out of line.
Yeah. So to answer the original question, what would be the telltale signs? And to try and pull all this together, a couple of things I think for me. The first is that every jurisdiction that I know of in the world, pretty much all of them, they're have to come in line with Financial Action Task Force requirements at the moment, and all jurisdictions are releasing what's known as a VASP regime, a virtual asset service provider regime. And so if you're located in any of those jurisdictions, and Binance is located in a lot of jurisdictions, then you may get grandfathered into one of those VASP regimes. And when you go into that VASP regime, you're going to have to bring yourself up to date with all of the regulatory requirements of running a virtual asset service provider business, similar to if you were running a securities business or something else. So one of the things that would concern me is if they got grandfathered into a VASP and then they didn't pass that VASP requirement. That would be something concerning. The second thing for me is that there's no doubt it's almost like the past is a distraction from us getting the answers of what we need today, because the reality is that every business is a mess. That's just a reality. Apple's a mess. HSBC is a mess. JP Morgan's a mess. If you look through all the messes that they're trying to clean, they're constantly trying to clean messes. And a business starts and gradually has to, you know, improve, and you make mistakes along the way. So there's no doubt in my mind that market manipulation, all sorts of tactics, because I remember what it was like in the early days with Binance. And yeah, no doubt that there's a whole load of shit that you've got to hide when you get that big that quickly. It's not possible. Like, businesses just don't grow that quickly without making a tremendous amount of F-ups and some kind
especially
of
in crypto, in crypto.
You don't grow that fast. Like, you just don't. Like, it's not possible to grow that fast. Like, you can't employ that many people and not make a ton of mistakes and all sorts of stuff. So there at a site, it's almost like I would like to see, okay, forget about everything from the past, voluntarily release the same level of information that Coinbase does as a public company, and accept that you are systemically incredibly important and too big to. It's not too big to fail because Bitcoin would still survive, and it wouldn't cost anyone, But they're too big to fail, as in it would just be. You're too important to the industry at this stage. And yeah, okay, so flush it out and we'll start over, and that's fine. But I think voluntarily, after everything we've gone through as an industry right now, you really should volunteer to release the same level of information as a company, as if you were a publicly traded company, if you really wanted to make that commitment. And you can get a firm that can audit you. I'm not going to say it's not hard. The hardest part is probably everybody demanding that the past be scrutinized, rather than saying, if an auditor would come along and say, well, let's just make sure that any holes are fixed and you can release this.
That's a good point. That's a good point. So what you're saying is that their past is haunting them right now, and they're not worried about their solvency. They're not worried about current things. They're worried about auditors looking into their past. But
it's almost like a presidential pardon. If you could pardon from the past and say it's better for our industry,
that can't happen. That's not possible. That's not possible, is it? I mean, I'm just gonna.
They're not gonna do that though. They won't do that because they probably broke so many security exchange laws in their past, and now that all these exchanges are starting to fall, just because their future might be on point, doesn't mean that they're not still being held up from the past. And I think that's the issue here with Binance. And I'm going to put my 2 cents in. I personally think CZ is the modern day Madoff. I don't think.
Jesus, bro, that's a big way to didn't expect that.
I think they are more over leveraged than FTX was. I think they are.
I would push back on that. Like, there's okay, look, if you want to call out, and I want to kind of end it with this, because I brought you up, Bullish, because we're going to start the pitches, and I think you'd enjoy that one, because I know you've been part of the pitches before. We got 2 pitches today, but like to kind of just wrap it up from my end, because I know you wanted to speak as well, guys, and I just want to get to the pitches and call it a day, because we have a big space in the next couple of days that we're preparing for, the COVID one. I need a lot of preparation for that shit. But from my end, their past looks, and I think, Simon, you were implying this, their past looks shaky, and you can't blame them for that, considering how fast they grew and how crypto was in 2017 and the lack of regulation we had. I don't think they expected to be where they are today. Such a big monopoly with such a big amount of assets under management. And the present is not really what concerns, I think, most speakers right now. Bullish, obviously, it seems different, but from a solvency perspective, I don't think many of us are concerned. So that would be my 2 cents there. And I think, Simon, would you give this one a thumbs up before we get the pitches over?
Simon? Yeah. As I said, every business is a mess. Like JP Morgan's, if you were go into that, it's the biggest mess you can ever imagine. And JP Morgan was built over hundreds of years. Can you imagine Binance was built to the size they are since 2017 in a transaction sector?
That's insane.
Like you're going to have all sorts of shit. So it would do a better service to the industry if you could just say, okay, but no Big Four is going to do that, because any Big Four that puts their reputation to a current audit and just say, right, the current situation, let's audit it like Coinbase. No one's going to do that, because they'll be scared of their reputation on what's discovered from the past and coming back to haunt them as an audit firm. So
it would be good if CZ says that himself, though. Like, I think I wish CZ would be saying exactly like, guys, I don't think he can. I think it's more complex than that. But if he's like, guys, look, I'll be honest with you. We grew extremely fast, and we made mistakes along the way, especially with the lack of regulation in 2017. So auditors will scrutinize us on our past when we were significantly smaller. We're very confident where we are now. I don't think he can say that, but it'd be cool if he does. We're very confident where we are now. We're happy to do everything to prove, solvency, no debt, etc. today. But the only reason we're facing some difficulties with some auditors is they're not understanding that we blew up really quickly. Exactly how you positioned it, how you compared to JP Morgan, Simon. It would be good if you have CZ or someone from Binance kind of just admitting to that. But
yeah, no, there is one more piece, which is there's no chance in hell they're in compliance with securities laws, and that is the big subject after this. Everything, securities regulators are going to enforce their securities laws. They're not going to introduce new ones. They're just going to enforce their existing ones.
How about their monopoly? How big of an issue is that, man? Like they were 10 times bigger than FTX back when FTX was at its heyday, and now FTX is no longer here.
Yeah, I mean, I think CZ himself gave a pretty good answer on that. There are benefits, and there is massive, ginormous, too big to fail companies in all these financial services sector and all these exchanges. It's not going to be different in crypto. It's going to be the same as it is in traditional finance.
Fair point. All right, so let's get the pitches done. So anyone that hasn't heard this, we do this in every show, almost every show, every crypto show. We get projects that will come on and pitch, and we've got 2 projects today. We've got Favor and we've got Petcoin. Favor is a project I know well because I've used their app, and I think I was the first person that has a punk to start using their app, so to integrate my punk into their app. So the way I look at Favor is like a decentralized social app where you can stake your tokens on. Now they're changing their structure a bit, but I'll let them pitch. You got 90 seconds, guys. So we got 2 pitches. The way that works is they got 90 seconds to pitch, and then panelists will give their honest opinion on the project. Last week, we had a few concerns with some of the projects that pitched. Today, I think will be, I know Favor well, and I look at Petcoin. I think we'll have less concerns. So yeah, Favor, you know how it works. Mike is yours, man.
Mario, can I just say a few things before you kind of start the clock? Just wanted to, as a prelude, kind of give credit to you guys. Amazing stamina, having hosted, all these spaces, throughout this period. So it's Tommy here tonight instead of Jonathan. We actually hosted a similar size space earlier today. So Jonathan took 80% of the speaking there. So I'm doing this one. The one thing which I just wanted to comment without having heard the previous discussion, I think it's interesting how I used to work also in TradFi, and kind of how I look at this whole moment is almost like the financial crisis where Bear Stearns falls, then Lehman Brothers falls. Then finally, Goldman gets bailed out by Warren Buffett. So I think even with 3AC Luna and then, FTX falling, I think, Binance probably would have enough, backing, even if, they probably won't need it, but they might be just kind of bailed out. But
I don't think they'll be bailed out. Like even CZ said, like there is no such thing as a bailout for crypto right now. Like crypto as a whole, not only Binance. I think a lot of these regulators would like they some of them will probably be praying for Binance and others to fall. I just don't think they care enough about crypto to bail out any institution. I could be wrong, and I hope I am.
Yeah.
And I don't think like Binance will need it. But
yeah, what I'm thinking there, like for example, Dubai has a massive ecosystem, right, which is very, pro crypto. So there could be whatever money coming from.
So you might have you might have exactly. So if one of those players that Sam didn't get a bailout because he broke the law, but if you've got an exchange like Binance or Qcoin or Ascendex or Crypto.com or any of them that need a bailout or that need liquidity and they haven't broken the law, I think you're right there. I think you'll have some private institutions or investors come in and bail them out. That makes more sense. I agree there.
Yeah, but my pure guesstimate, and I work at Goldman as well at some point. I know there were some conspiracy theories about Goldman as well, which is kind of funny to always hear.
What was the conspiracy theory?
I think there was something about Goldman in one of your spaces. I just found it funny having worked there. It's pretty.
What was it? What was the conspiracy theory? I'm curious. I forget, man.
I think there was some something about Goldman being linked to whatever, like multiple plays. I can't remember exactly.
Okay.
But I think there's a lot of funny things always being discussed.
Yeah, whenever there's news, there's conspiracy theories. Yeah, cool, man. All right, let's kick it off. So you got 90 seconds. Appreciate you being here, man. Let's hear the pitch. 3, 2, 1, go.
All right. So Favor is a decentralized social app. We are the largest app on Lens Protocol. For those of you who don't know what Lens Protocol is, it's built by Aave the big DeFi protocol. So Lens is similar to Farcaster and some of the upcoming protocols like AD protocol. So Favor's idea is to not only kind of provide ownership of your social capital initially on Lens, but also going forward integrate other protocols like some of those which I just mentioned. And I think as kind of the other three key pillars for us, we see our token economy being one of them. Then there's the whole concept of kind of on-chain assets. So basically connecting your wallet-based reputation, whether it's like your NFTs or your online achievement tokens or other things, which can kind of enhance also your level in the system. So as opposed to kind of the $8 paywall, we think that there is like a massive opportunity to create this kind of proof of work concept within social, and finally kind of the permissionless nature of the whole ecosystem allows
10
us to there you go.
I was going to say 10, 9, 8, so not time 10.
Okay.
So essentially, yeah. Oh, good. Oh, sorry. To summarize it, just for the audience that's not too technical as well, I would say you're a decentralized social app. I'm an investor as well in DeSo, which is also a decentralized protocol. So you're a decentralized social app built on the Lens protocol, and you essentially allow people to also integrate their wallets, which becomes like kind of an indication of their reputation. Is that how you refer to reputation?
Yes. So basically connecting like social assets, including NFTs, but also like online achievement tokens, or minting your GitHub reputation with a partner, and kind of using those as either kind of gates or kind of access to certain things like gated topics, etc. So that's kind of the main idea there.
And you're launching a token, and what's the utility of the token?
So the main utility of the token is kind of the same things where you kind of value happens in traditional social media. Kind of biggest thing, coming from advertising. Second largest is typically kind of Patreon, Substack type premium content, and then there can be adjacent marketplaces. The main idea is that from the genuine value exchange that happens in the system, the users can earn the token and spend it as well on it, and then ultimately we would bring in advertisers which would use our token as a form of payment for the advertising. So in that way, the value would flow directly to the creators, as opposed to like in the traditional models, all the ad revenue flows to kind of the existing cap table. And this is why the influencer marketing and everything is kind of selling ads separately, because you can't benefit directly from.
So is it like a Web3 version of Twitter, or like a launch pad? Is that what it is?
Yeah, good question. So kind of UI UX wise, it's very close to Twitter or Instagram. So right now, it's mainly kind of static content and links. We're just adding video and GIFs, etc. But yeah, like,
and you can log in with your wallet, and that's your login instead of making like an email password.
So we actually, good question. So we actually start with the Web2 logins, and then you can supercharge your experience with the Web3 stuff. So you can also log in then with your wallet. But the idea is that you can kind of, this is the gateway to Web3 social. So you should be able to onboard without knowing what the wallet is, all this stuff. And then gradually enhance your experience, and then transfer your assets to your self-custody when you're ready for it. So we think this is kind of the key part of the thesis of onboarding actually the next billion people into the space.
Umbrella, sorry, unmute.
Yeah, I was going to ask the same question. So I guess so you have to sign up with an email, and you don't see that as kind of a roadblock to bringing in Web3, native Web3 adoption. Who, I personally, if there's an email that I have to use on any service, I just don't do it, unless I have to. So, if I can just connect my wallets, I'd rather just connect my wallets and create a profile through that. Similar like with OpenSea, you can just connect your wallet, and if you want to add an email, you can do.
Yeah, 100%. We are actually adding the wallet login because it's way more kind of intuitive for the Web3 crowd. So the idea is to have both. We're actually working with many of the wallets like Rainbow Wallet on partnerships where then, people can actually even create the wallets with the one-click, creation, which saves, the seed phrase in the iCloud. So I think there's various things where you do a combination of like pure Web2 or pure Web3 or kind of this thing where you kind of create the wallet as part of the flow.
Just quickly, I've got Crypto.com just got a license as a payment institution in Brazil. Just want to mention that CoinDesk just reported it. So that's good to see because I know we've been critical about Crypto.com after the whole gate quote unquote mistake. So it's good to see them powering. I think license is the best way for an exchange to. Obviously, FTX kind of shits on that theory, but it's one of the better ways for an exchange to signal to the world that they're they're on the right track. So yeah, so I know Joy, you wanted to mention something as well. You sent me a good message. I'll let you mention it here.
Yeah, I mean, typically when I look at projects, I always look at real world value. So I always try to see like what's the problem that you're trying to solve. And when I went to your site, I got excited because it said share to earn, right? And there's a lot of products out there that need reach that they can't pay for because they're a crypto company or an NFT project. How does this solve that at all? Like where an advertiser can gain exposure by sharing by getting people to share their content? Because that I see a lot of promise in.
Yeah, 100% is core part of the thesis. We actually kind of deviated a bit away from the share to earn because it just kind of ties us too much into the play to earn space. But indeed, the share part there was meant like, not only the users are sharing, but kind of, it's moderation, it's advertisers doing campaigns in a manner where they're also in the right topic, so not invasive algorithm driven ads. So one example which we did was in collaboration with Sandbox and Layer Infinity, which did like an NFT launch, like an Omni chain NFTs which work across chains and even in the metaverse, where they sold out the collection in like 2 minutes 3 days after the FTX crash. So at this stage we are kind of onboarding in a very selective manner the kind of brands or projects which actually have relevance to our early Web3 community. But in the long term, the idea is that, for example, Nike can go into our sneakers topic, put the relevant kind of sneakers drop or whatever in there, and then kind of the final cost of the ad would be determined the same way as Google quality ad score. So also based kind of community feedback is what you actually end up paying as cost per mil basis.
But does it only share on Lens, or does it share on like a traditional Web2 social media, like Twitter, for example?
Yeah, good question. So it basically now shares it on across the Lens protocol. If you have the Lens handle, it's still like fairly restricted. Otherwise, it just shares it in favor. There is no direct. Well, you can actually from the Lenster side, you can push it as well with a widget to Twitter. The other way around is obviously tougher because Twitter is very jealous of their audience and like would block any kind of API that way around. But yeah, good question.
So we'll go to we usually do it with 3 questions per project. So Brock, I know you're very involved in these. So what are your thoughts on what Favor is doing?
Hey, yeah, I just had a question for him because I am familiar with these. So from an average creator's perspective, like what can they do? Like, do you have tipping functionality? Obviously, NFTs be integrated. Like even DSO, you could sell the person's coin. I'm just wondering from like a creator's perspective, what do you have to offer?
Yeah, so from creators' perspective, the idea is that you can earn our utility token, or actually we call them points in the app, to be App Store compliant as well. From for example, providing gated content to other users. So that's the kind of Patreon model. There will be tipping as well as a direct method. Of course, that one you need to be careful that people don't kind of game the system. So the leveling thing is kind of required so that people don't circle the points too much into kind of multiple accounts into a single one. I think the key thing for us is versus kind of we just want to accrue the value in the 2 different tokens in the system. as opposed to have like multiple tokens for creators. So we see that, you know, this could potentially, it's just like a different approach, how you kind of try to capture the value into this kind of internal, you know, currency and you know, the governance token as well of the system.
And how does someone accumulate those points?
So right now, basically, people are doing the staking in the app. So so everyone right now gets 5 free stakes per day. We are now switching into a model where you need to do proof of personhood, even to be able to use those 5 stakes. So then, you know, if the creator has made a post and, you know, it gets a lot of stakes from the other users, then you basically generate the tokens for yourself. We also want to kind of reward the normal users. So there's also a mechanism if you stake on a post early on, which then becomes popular. So especially when we switch on the algo, we want to kind of reward the people who are picking up the content from the most latest chronological, as opposed to just like, you know, looking at the already kind of qualified top content.
So I'll based on the yeah, and after that's last question, then we'll get everyone's thoughts on it, all the panelists' thoughts. Also, we got Mike on the stage. So after we're done with Feather and Petcoin, I'd like Mike to stay a bit more because I know, Mike, you've had a lot of concerns about Binance. So it'd be probably good to have a quick discussion on your concerns as well. I wish you joined earlier because we did the Binance segment. I'll try to get Simon up on stage again. So Romy, if you can get Simon on stage, would be great. Maybe Alex as well, Romy. It'd be good to have that discussion again about Binance and see what Mike's concerns were, because Rand mentioned that you were one of the more vocal critics of Binance. But yeah, so Umbrella, I'll let you ask your question. I know Cyril Seals, you have a question as well for Favor, because I know you're from DSO as well. But we'll just have you give us your thoughts on Favor after Umbrella's question. Umbrella, final question for our friends from Favor.
I guess I just wanted to know if the staking's on chain, but I guess my real question is around content moderation. So to be a truly decentralized version of Twitter, content moderation also needs to be decentralized. Is your content moderation decentralized, or is the plan to be decentralized?
Yeah, very, very good question. So it will be decentralized. Right now, we're still kind of doing the modding in-house, but the idea is as well that, you know, you can earn the tokens from kind of you know, flagging content, and then there needs to also be a consensus mechanism. For example, like, you know, not suitable for work can be a very different definition across regions, as we've seen. So kind of forming a consensus as well, where then if you're actually flagging content which shouldn't be flagged, then, you know, you kind of lose the utility token, as opposed to if you contribute to the right consensus. And then just on the, for example, on the Lens protocol level, there's basically kind of an API level thing where kind of the apps can also share information about the kind of flag content, which then you know, doesn't go on chain at this point. But ultimately, I think in the next next iterations of the protocol can also be integrated more towards kind of the pure on chain layer of.
All right, so we'll go to the speakers, guys. Quickly, I'll start with the DSO guys. Actually, I'll kick it off first. Favor, you know, I think we're invested or we're working with you guys, one or the other.
Yeah.
So you know, that kind of put my you know, my money where my mouth is. Big fan of what you guys are doing. A lot of questions, and I know you guys are still working out tokenomics. But I'm a fan. I love what you guys are doing. I love you guys as a team. The background of you and the other CEO. Bad with names, man. So you've got my vote of confidence. I can't say I'll invest because I'm already invested. But if I wasn't, I'd say yeah, I'd be interested to invest. Speakers, anyone else? So obviously, you don't have to commit here because there's a lot more to it. But yes or no, interested to look into potentially investing, or no, a pass? Maybe Umbrella, you go first.
I mean, I really like what they're doing. I guess from a Web3 project, yes. I mean, I'd definitely be interested to invest in it. From a token perspective, probably not. I know, you know, the kind of move to earn or X to earn tokens generally aren't a very good investment from a token perspective. But
unless they, for me, unless the utility makes sense beyond just you know, Ponzi scheme-ish model. I'm more bullish on the whole X to earn. I think it's just got a bit of a bad rap because it's just too early. But I know it's a discussion for another day. Bullish, yes or no? Keep it quick, bro.
Yeah, I like it. I like how you're doing, like trying to go Web3 diversified Twitter style. I think what would be cool, just a quick suggestion, is like when you get, you know, you said share to earn. I think it'd be cool if when you launch your token, you can use the share to earn, and people can share, accumulate the token, and then actually cash the token in for advertisement and stuff. I think that'd be pretty dope. But yeah,
cool. Cool. Appreciate it, man. Brock, yes or no?
Yeah, I'm curious to see where it goes. Like trying to get people in from the Web 2 space, it's always a big challenge. But to see how it kind of operates as a social media platform would be interesting to see.
Cool, man. So Seals, I know you're here with Petcoin, but would love your thoughts since you're from DSO as well.
Yeah, man. Just wanted to chime in my thoughts on Favor. I think it's definitely something to look into. My question is similar to Brock's, just on the kind of the tokenization of the whole project, because I really like the whole stake to an important post where you can get in early and then, earn off of that. I think that's something that we haven't seen on DSO, for example, that I know Mario and Brock are also invested in, but I think the share to earn model is good. I know there's something on DSO that's called post to earn, where advertisers, actually pay people to post on their behalf. Just commenting on that, I think it's
cool.
Definitely something worthwhile. Bullish.
Cool. I mean, Joa, quickly, your thoughts?
Yes, I will. If they want to take my DSO tokens, have a big bag.
Bro, we got to Joa. Joa, thoughts on what Favor's doing?
Yeah, I'd want to see focus on what the problem is that's being solved. And if that focus was clear, then I think they have the solution. I think they have a solution. It's just, what's the long-term problem that's being solved? Because I think there's something there.
Love it. All right, cool, man. Let me just message Alex and Simon to get them to join. So before we go to the second and last pitch, just want to say, Favor, great pitch. Anyone that's interested, you could DM Favor, Phaver. They're on stage. Anyone listening to the recording, just DM us and we can connect you. And just a reminder, I know it's tough times now, but we had Mark Andreessen on the show a few days ago, I think 2 days ago with Elon, and he said, I don't give a fuck about what the market is doing. Like, we have a 5 to 10 year horizon. And I recommend for anyone else that has the liquidity to have a similar approach during times like these. But great pitch, guys. I'll leave you on stage for a bit longer, just so at least you're there. Anyone on YouTube as well listening, you could just DM us. We can connect you. We'll go to second and last pitch. Petcoin, you got 90 seconds, guys. What's up, man? We got 90 seconds, guys. I'll put the timer now. Let me get it.
Yeah, Mario, I just wanted to, kind of set the stage for them, for Anthony and Rich.
Please do, man, of course.
On behalf of Petcoin, you and I know each other. I know you know Jeremy Gardner as well.
Shit, is he involved?
He has been advising, the project. So, long story short, I'll keep it brief before these guys, but it's essentially you're tying in sort of like the giving block, idea of basically making a transparent and trustworthy charity system through pets, which everyone loves. So you have your pet store, you have a pet rescue with over 1,000 shelters, and then the Petcoin is really just kind of the underlying assisted by blockchain technology that basically logs these transactions on the blockchain, keeps it, point A to point B. And yeah, man, it's really cool. It's something we've definitely gotten the best people around, such as Anthony, and I'll let them kind of take over from there.
Cool. All right, Anthony, the mic is yours. I'm going to start the timer and okay, there it is. 5, 4, 3, 2, 1, go. Anthony, Petcoin. Seals, it's not going well. Okay.
Everybody.
Hey, man, yeah, I'll start the timer again. Go ahead, bro.
Hey, good morning, guys. Hey, thanks for the invite. You guys did a great job, great show today. So at Petcoin, we're a crypto with a purpose. So people say, why Petcoin? Well, there's about 90 million households just here in the U.S. that have a dog or a cat. And after talking to a lot of people in the industry that are concerned about rescues and shelters and just the pet industry in general, my wife and I are big into the rescue field. We saw that there was a need for transparency in the charity world. So just last year in the United States, there's about $2.6 billion donated and used in shelters and rescues just here. And a lot of people say, when I donate, where's the donation go? How's it used? So we came up with the Petcoin concept that every time you use it in commerce, our utilities are, you can use it at our store at petstore.love. We have over 10,000 products. much like Chewy.com, only better, because every time you use Petcoin in a transaction, the transaction portion of the transaction fee goes to the shelter or rescue of your choice. You don't have to own Petcoin to spend money at the store, but when you do, all transactions are converted to Petcoin on the blockchain, and you get to direct where your donation goes to. And very shortly, you'll be able to tell this charity, where do you want it used? Do you want to use it for supplies, vet services, rent, operations, those kind of things? That's next on
10,
very short.
9.
So anyway, that's our project, and we're Web3 based, and we're on Solidity, and we're on the Binance chain.
Cool. All right. Who wants to kick it off with any questions for Anthony? By the way, before we kick it off, Mike, do you want to do the Binance segment? Maybe we can organize a bigger segment to get all the speakers back. So maybe we could do another coverage of Binance next Thursday before we continue with Petcoin. What do you think, Mike?
Yeah, that's fine. I just was busy today. Sorry, I couldn't join.
Yeah, all good. And we didn't give you enough notice. Like, we pinged you a bit late. So we'll ping you earlier. We'll get it scheduled in. I'll actually send you through my WhatsApp number, and we can just chat on WhatsApp directly and get it organized. Just wanted to let you know. All right, bro. I appreciate you coming on.
I don't use WhatsApp, but we can do it by DMs. I'll talk to you later.
Take care, bro. Thanks. All right. So back to Petcoin, guys. Any questions? Who would like to kick it off? I'll kick it off for Anthony. So Anthony, looking at the utility of Petcoin itself. So the first thing I got is you essentially use the coin to buy products off your store, similar to Chewy, but you've got a coin that's being used, and then a percentage of every transaction goes to specific causes like supporting shelters. Is that correct?
Yes.
Okay. Is there other utilities to the coin beyond a form of payment for goods from your website?
Yeah. Well, you can donate the coin, and then you can use the coin at our store. And you also can donate to one of our 10,000 shelters and rescues members that we have signed up at petrescue.love. So when you can donate the coin directly to any of those shelters.
And why do you need a coin for this? What's the benefit of having a coin rather than just either buying the products via dollars and then donating dollars to the shelters?
Well, the thing with donating the dollars, what we found is, like I said, I'm heavily involved in the shelter and rescue industry here.
Transparency.
The transparency, right? So people say, well, when I give the money to the shelter, where does it go? How is it spent? How do I know that it's?
And will you? This one's an easy sell to me, the transparency aspect. But the other question I have is that, can you use Petcoin, and are you doing partnerships with other stores that will also integrate Petcoin?
Yes,
we're
now in a negotiation with a large payment provider to have our own Visa and debit card. So you'll be able to use it not only for pets, not only just at a store. You'll be able to. You want to go to dinner, you want to go to Target. You just anytime you use it.
Oh, so now Petcoin is like a form of transaction.
Yes.
For with anyone that supports pets, and I'm in, bro. Yes. I love fucking animals like crazy. Yes. So you're like, I remember years ago we were discussing Andreas Antonopoulos, whatever his last name is. So it was about the and that was years ago when no one, before the ICO hype, how we're gonna have multiple coins as for different utilities. Why? Because each one will represent a certain identity or cause. Like in the NFT space, we have, like, even if you look on stage right now, since this is a crypto show, you've got me with my punk, Umbrella with some cat, Bullish with some monkey, I don't know if it's an ape, it doesn't look like, no, Amin with some penguin, Seals with a cat, and Catskill with nothing. It's unrelated. Doesn't look, it's just a logo. But we've all got a different NFT instead of all of them the same one, because each one represents a different identity. So the concept of each coin having an identity, so you can go to a restaurant and you can pay with Petcoin if you like pets. You can pay with Arab coin if you want to support the Arab world. You can pay with FIFA coin if you want to, get points for FIFA. It's like different types of credit cards, and each one has its own reward system. Is that a good way to position it?
Yes, yeah, and that's the big thing. We think that we're obviously, much like you, Mario, we're big believers in blockchain technology and blockchain transparency. And I think as you talk about this all the time. I listen to your show almost every time you're on. That blockchain is and Web3, it's going to change the finance world forever. People just haven't come to grips on how it's going to do that yet. And we truly believe that as this goes down the road, and I was just talking about the shelter and rescue business, the pet supply business and pet services business is $124 billion a year here in the U.S. So we think we can help that become more streamlined. We have an NFT platform coming up, just not NFTs, pictures of dogs or those kinds of things, or art. You'll be able to store your vet records with our NFTs. You'll be able to the microchip that your dog or cat has in it. You'll be able to store that documentation there. So we have a lot of things. It's a huge industry. 120 plus million homes just here in the U.S. have a cat or a dog, or 90 million have both. So we just believe that with how big that to bring crypto to the masses.
I got breaking news just quickly for the audience. Two things. A real Meet Kevin. So Meet Kevin, which is a big influencer. It's unrelated, by the way. Sorry, Anthony. But we do this when there's breaking news. Meet Kevin just mentioned that in his latest YouTube video, he's exposing Binance as a fraud. He did an interview with CNBC. So he's a FTX and BlockFi promoter. So it got a second FTX promoter calling Binance a fraud. It's fucking crazy how they flipped from supporting FTX to now shitting on Binance. It's very weird. And then another one, which goes to favor, Jack Dorsey, it gives another decentralized social network called Nostr, Nostr, 14 BTC in funding, which is about $250,000. So that's just another indicator of the potential of decentralized social, which is really why we're very bullish on it. So it's a big plus for you, Favor. But back to Petcoin. Before I go to Joa, we maybe give it another 2 questions from the panel. But when I looked at your website, I'll be honest, bro, I wasn't too excited because I had a quick look. But now that you pitched and knowing that Sir Seals and I forgot, Jeremy are involved. Yeah, Jeremy are involved. I'm more bullish, and now seeing the utility of the token without looking at the white paper, very interested. Very interested in what you guys are doing and the use case you have. Joa, you've got a question for Anthony?
Yeah, Anthony, how familiar are you with affiliate programs? Just because I see, like, I love the space, also really big into animals. I like the idea. Like Mario, I wasn't impressed when I went to the site, but when you spoke about the credit card, I got excited, but I got excited for a different reason. I got excited because, for example, if I send someone to PetSmart through my credit card, I can get 8% cash back through an affiliate fee, and that can go towards pets. Right? Is that all planned out already? Or are you looking into that? Give me like where you're looking.
Boy, I need to talk to you after the show. You're on to us. So we'll announce our affiliate program in the first quarter next year. Probably it's ready now, but probably February. So we have some. I'll tell you who they are. If you go to Izzy the Frenchie on Instagram, it's a French bulldog, 1 million plus followers, and then Nala the cat, 4.5 million followers. They're our first affiliates, and they are going to have our store featured on their platforms. And every time any of their users use our credit card or use Petcoin, promote with their affiliate link, promote our store or rescue, one of our rescue facilities, they earn money.
Yeah, Anthony, I get that, and that's really good. I'm saying the other way around. If you send your card holders,
cash back, you're talking about the cash back feature.
Right, exactly. If you send people to PetSmart, you get cash back.
That's what I'm saying.
If you're a part of the affiliate, yeah.
Yeah. So if Nala the cat sends out of 4.5 followers $500,000 and 500,000 people to our site, every time they spend money, Nala gets cash back, or the user gets cash back. He wants cash back on their card itself.
Okay, but will you do that for your card holders?
Yeah. So Joe, to answer that question.
When the user, not only does the affiliate make money, but the user earns cash back.
Right.
It's twofold. It's twofold. So the affiliate gets a little percentage. Like one of our influencers doesn't want any of the cash back. They want all the proceeds to go to the Chicago French Bulldog Rescue. So they won't get anything, but the user will get cash back on their card, and they can use it any way they want it. They get a credit. They could buy Petcoin with it. They could buy stores, or they could just take the cash.
I just want to add on to Joe is saying too. Where would the cash back come from? Where's that funding come from?
It's paid in pets from us.
Okay, so cash back would technically be Petcoin.
Yes. Yep. Mm-hmm.
Okay. And then another question. So you're talking about the donation. So you technically couldn't donate until you guys had your quote unquote banking system set up, right? that's when you guys would initially start doing the donations?
Oh, we start doing the donations now, because if you go out to our contract slide, we only have a small amount of liquidity. We have a soft launch going. But if anytime the coin's used right now, there's a 1.5% transaction fee, and that now, as of next week, the user will be able to just click on the one of the shelters that they want to donate it to, and it goes into that non-custodial wallet. We partner with Magic. I'm sure you know who those guys are. So when you sign up at our site, you get you immediately sign up with your social, your cell phone, or your email. You get an automatic non-custodial wallet provided to you so you can store not only our coin, Petcoin, but
and that's backed by what, liquidity wise? Is that already backed by, like, say you guys have $1 million already backing Petcoin? Yeah. So when donations go through, or the people you're donating to, obviously they can't use Petcoin for anything at the moment. So can they cash that out to, say, a stable coin that they're able to
100%.
use?
100%. They can cash out to, but we recommend BUSD because we're in the Binance chain. But they can use it. If you go to our store right now at petstore.love, you can see, if you look at a product, not only does it have the US dollar next to it, if it's $10, it tells you real time, mark to market, how many pets you will need to pay for that product. You can go to the checkout and pay, and not only pay with just pets, but you can pay with any cryptocurrency on multiple, or on, and all the.
We'll go
Yeah,
just for
also,
the audience.
To quickly answer, to quickly answer that question on like a blockchain sense, it's they're accepting also in fiat as well. So the way Petcoin's used in this sense is basically you would quickly swap just to get the transaction on the blockchain and log it in, and then send over pets, which is actually just US dollars, over to the shelter or intended recipient. So the coin is also just kind of like a mark to use for logging transactions and transparency and trust on the blockchain.
So I want to just quickly, another breaking news. So over 878 billion. It's not really breaking, but it's worth mentioning. Over 878 billion dollars was wiped out from US stock market today. Just some bad news to mix it up with the good news earlier. I've just done a tweet with both Favor and Petcoin for the audience to vote on which project you prefer. Just pinned it above as well. And in the meantime, I'll give panelists the option to give us, not the option, you're forced to give us your thoughts. Umbrella, do you want to kick it off?
Yeah, so I think it's really cool what you guys are doing, but every time I've either put money or looked at charity coins or charity tokens, whether it's on BSC or Ethereum, unfortunately, at the end of the day, when you buy a token, you want the number to go up. And as great as a cause might be, when you go into charity, unfortunately, there's a disincentive there. And I've seen it with numerous other projects that over time they generally don't work out. I haven't seen a big charity coin actually do well over the long term. And that's just my view on charity coins as a concept.
And why do you think the concept doesn't work, Umbrella?
Well, I think if you really want to do charity, why do you need a token? You can, if the whole argument is that you want it to be immutable on the blockchain, you can just use a stable coin.
What do you think of the transparency aspect, though?
Well, you can just use a stable coin, right? That's transparent. So
what about the giving block, for example?
Well, you can give using a stablecoin, right? So you can build a platform that gives using, BUSD or USDC or any other stablecoins. It doesn't necessarily have to be. You don't necessarily need a token with a tax on it. That's just my view on it and what I've seen historically.
Is if the Petcoin was 1-for-1 to the dollar. You know what I'm saying? Like, I know, and I'm gonna.
Yeah, like that's a question. Why would you want the Petcoin value to fluctuate rather than just being a stable coin? How does that help the utility in any way?
Is that question for me?
Yeah, you're welcome to take it.
Yeah. So we looked at it making a stable coin, and we're not so sure that we won't have a stable coin in the future. When we first came out with the concept, we looked at the crypto community, because we want to get the crypto community heavily involved. As you know, there's only about 14 or 15% of people here in the US that have actually traded or even know a lot about blockchain technology or crypto. So we're after that 85%, and 85% of the people, they they tend to want to be risk takers. They want to try to make some money. So we said, well, first we'll do a pet coin that maybe has some volatility. Maybe it doesn't. Maybe we'll trade around it. Right now we're about $0.015 or something. Maybe we'll go up to $1. Who knows? Who knows what the value will be? But we're trying to bring people into the crypto space because there's, just again, 86% of America isn't into crypto. So we're trying to bring them onto our site and get excited about it. So we thought that maybe, with the value of having the opportunity to be able to make some money too, we'd get a lot more people interested in the project.
What's your supply on the token?
10 billion token supply.
Cool. I'm just having a look at the comments in the audience on the pitch. So what do you think? Umbrella, give us your thoughts. Bullish in let's say 10 seconds. What are your thoughts?
Yeah, I mean, I would just never. I probably bought the first charity coin, which is called Earth Coin, and ever since then, I've just they've never worked out. So no, but kind of just to give you some points of reference, it probably took me like 5-10 minutes to find your contract. So and even to find any information about your smart contract, etc. Even when I searched on aggregators such as Dex Tools, I found it very difficult. So kind of point of view, make it a lot easier to find it. Even on your website where you list BSC scan, it actually redirects to your website again. So for me, that's the kind of first point of view, and a lot of people to want to see is make your contract a lot easier to find on your website. Kind of the first thing I would say.
Bullish, your thoughts? Try to keep it within 10 seconds. Yes or no? Pass or interested?
I like the donation aspect of it and what you're doing, but I think the volatility on the token is going to be a very big burden, because you figure, if your token's only worth a penny, that means you have to give 10,000 tokens donation, out to equivalent of $100 to $200, whatever it would be. I think you need to work on getting the token as stable to the dollar as you can. And I think that will do you a better service than having a volatile charity token.
Got it. Got it.
Yeah, I'm an innovation guy. So if you guys looked at yourself like a credit card reward company that the rewards go to save pets, I'd be all in. But the way you are right now, I would be out.
Why are you out exactly? What part of the model you don't like, Joe?
Because you need money coming in and not just people buying it to then spend it. You need money that comes in. If not getting affiliates, but you become an affiliate of PetSmart, for example, or Chew, or any of those guys, which all have affiliate programs, and you get your cash back from the big stores, you have revenue coming in that's not just to spend, right? And that's what you need if you have this token and you want transparency. And that's the part that's missing for me is where's the value, where's the money coming in and staying in, so that people just don't lose money at the end of the day.
Got it.
Yeah, it's a good point, Joe. And I think it's something that, you guys have to understand as well. It's a huge project, trying to connect the fiat world with regular donations to then also make it appetizing for us in the crypto space. So it's it's a long project, but I will say that they have the runway to do it, and it's one of another of the good guys coming into our industry is all I will say.
Brock?
I mostly agree with what Umbrella said. I wouldn't, you don't want to box everyone into the same category, but generally speaking, I agree with Umbrella, but I'd be curious to see how they move forward for sure.
Yeah, I'm a bit more bullish. I think I agree with Umbrella's point as well. Like charity coins have had a track record of not succeeding, but obviously that's not a reason that Petcoin doesn't work. Also agree with Joe. I think the credit card affiliate model is interesting, but I would look at, I think that it just needs more work on the tokenomics, token structure, and coming up with better utility. Like there's someone I want to connect you with, and if they're happy and like after they chat with you and there's a good vision, I'm going to connect you with them after the call. Then I'd be significantly more bullish, but I'm already bullish with the team behind it. And I'm sure you guys will pivot if needed and build out more. Like even with Favor, we've had calls for a while now, and they're very flexible with their token structure because all of this is an experiment. So that would be my 2 cents, Anthony. So generally, like I think most speakers were on the fence, and I think if we could maybe get you back on the show in like 3 months' time, that's just me personally, because I think it'd be interesting to see, and then see where you guys are at. Then I think it would be good to kind of revisit it after a few months and see how the token structure looks like.
Fantastic, guys. We really appreciate you having us on.